Diversified.
Real.
I'll be back. Let me go get me some water.
Yeah. What's going on with my man Romy? Jerome Powell.
Brother Porn, you muted, brother.
I'm sorry, can y'all hear me real quick? Peace, Power, Prophet. Can y'all hear me?
Prophet.
Okay,
Yep.
yeah. So I'm getting ready to set it up. Well, we're live now. I'm actually going ahead and running a community day scenario. So just keep in mind, guys, we are going to be a recording scenario over there on the two side today. So we'll make it like a community day, right? Throw a little freebie out there for the family. But of course, it's more direct for you guys because y'all are actually on the live in itself. So just keep in mind. So you know how it is. You got to throw that disclaimer out there. So you might have somebody run through and say, hey, chicken waffle or something. But
Yeah.
hold up. I'm live.
The Flynn Flanagan's going on.
Yeah. I'm live. Hold up, girl. Don't talk about some Victoria's Secret right now. I'm on live. I got my business all out there in the streets.
In them streets.
So I am live now. Just keep in mind, guys, I am live now on both sides. So that way, at least you guys are up to speed with that. So what I'll do here, I think Cisco Mill will be in here any second. Like I said, we're gonna get this thing popping. So what's going on? All my YouTube family over there, peace, power, profit to you guys as well. Thank y'all for kind of tuning in. Today I felt like, hey, kind of off the grid a little bit here. We'll do a little bit of community day outreach to all the family out there who was definitely invested into the markets, kind of like we were speaking about earlier on my earlier live stream. Kind of sharing in the wealth of knowledge and trying to, build upon where we may be individually, but also where, we are as a community of traders and investors. So it's never a dull day to kind of get some knowledge training in, right? To rub some brain cells together, kind of see if we can come up with a plan of action that may lead to a bag, right? Or a potential, a better enhancement to our skill set, so to speak. So again, we're going to talk about a little bit about equities and options. Of course, we do have some forex traders in the house. So in the event someone has a particular question surrounding that field, we'll be, happy to pass that off. But for the most part, we're going to have a structured scenario in terms of a little training, go over some data points, the relevancy of that we're dealing with right now in terms of the overall equity markets, where we as a, I don't know, I should say as a trend, ultimate trend perspective, where we need to be kind of looking at areas of interest going forward, assessing any kind of particular catalyst that may be coming down the pipeline future-wise, to try to trade around, or to be cautionary with knowing that those things can obviously become a problem, or it could be a positive. Who knows? But you always want to look at the good, the bad, the ugly, right? You never leave no stones unturned, no leaf uncovered, as we like to say, right? Because again, we're trying to be more proficient, in our trading. Ultimately, again, our ultimate thesis is always as it has always been, right? This is a marathon, not a sprint. So we are invested more than we are traders mentality, even though we may trade a lot. My overall thesis is that I'm trying to establish a line of generational wealth. And I'm pretty sure everybody that's in attendance, we're trying to do the same, especially we feel like we're already behind a little bit. And that's just trying to really build up these portfolios. So along the way, we can't stop and go trade, make a little bag here and there. The idea of us being able to, also, I should say, capture some long-term perspectives in play too, right? These so-called next new innovative treasures to kind of now put a few dollars in and see if that thing can grow, right? Earlier today, I sent that the link. Kathy Wills actually was live today on Investors Business Daily, of course. If you guys not familiar with IBD, of course, they're a major publication where people get a lot of good information off them, like a Benzinga or Market Watch, et cetera, et cetera. So she just finished speaking to them over there on their site. She's actually still going live, actually, I should say. But like always, when Kathy Woods, is live, she's dropping some good game, as we like to say, right? Market game, because this is a woman that has definitely turned, stock market up, side down, lifted on its head. She's been outperforming pretty much all your top ballers out there, your Dalios, your even Tudor Jones, right? One of my so-called quote unquote market, idols. Definitely Warren Buffett in their group, group over there with Charlie Munger and those guys. Kathy Woods is pretty much, she has been the, the archetype of late. I should say that asterisk of late. She has been the archetype that people are trying to model themselves by, because what she's done, which is something that's very brilliant. She's taken the ETF model, which is more of a sedentary, game plan. I would say at least biannual to annual, because they like to trade around the fiscal calendar and say, hey, of course, they don't like to deal with the whole tax issue with, trying to jerk and jerk trade throughout the year, incurring all these kind of, tax liability costs. They try to wait to that, 252 days up. Obviously, when tax loss harvesting season happens around the month of December, they like to kind of then make a decision whether they're going to kind of trim their portfolios here and there. Well, she said, well, with my understanding, I like to have these subsidiary ETFs underneath my brand fund manager package as a whole. And you can kind of move into different areas that you may have an interest in, like art, G, finance, innovation. I mean, obviously got one on genomics and many others. And what they're doing what they call a peak to trough strategy or game plan, right? Y'all heard me speak about that a lot of times. I use that myself. I'm not gonna say I got it from Captain Wood, because I already had that mindset. I always like to be a good dip buyer, and I like to understand the value of trying to short the top, right? Again, I made some of my bigger trades, my biggest trades to date came off of using those kind of level of aspects or strategies to a degree, right? Trying to make sure I read, the tea leaves correctly, right? When there's market exhaustion, a crowded trade, overextended RSI, again, a MACD that's getting ready to turn over, right? Whatever the case, I'm trying to be around those areas of interest at that point, so I can now feed, obviously back on the downside for stock is turning over, and the same when it's bottoming out. So again, a lot to say there, but with that being said, again, like I said, we're gonna get into some training. We're gonna welcome you guys as well over here on the YouTube side. This is all right, because y'all like, what? You say nothing about no training stuff. Well, this is more for our mentor scenarios, right? These are the paid members, obviously, that took advantage of this, the market and the knowledge to want to be shared and disseminated. And so I'm always forever grateful for that. Of course, like I said, thank them more than thank myself only for today, because it's a community freebie. I get it in during the regular week when I can too, on live on YouTube, but this is how we go to work. Right. So again, we're gonna cover some data points. Maybe we'll crack open a couple of PDFs as necessary, and we'll utilize about a good couple hours or whatever the case. Again, I want to hold you guys up. It is a Saturday. It is a fun day. I think it's March. Basketball games are going on, right? And it's March Madness or something. NBA. Oh, I mean, excuse me, college. All right. Aren't we in the March Madness? I don't even know who, y'all. I'm telling on myself, so y'all don't come for me. Y'all not gave up on all that distraction stuff. Me personally. A minute ago. So again, I just don't like the politics behind a lot of that stuff at this point. And maybe they'll come to this sense and they'll kind of equal that thing out the way it needs to be. But from what I see, it's still a ball and chain kind of business model. Right. Without me having to say it a whole lot. So we need to become more on the corporate side that we need to get into some of them C-suites, right? We need to enter into the C-suite side of that, and then they'll get my attention again, because it's not being evenly distributed. But anyway, I'll leave it at that. I don't want to go politicizing something that y'all may like, because y'all can probably shoot me with a dart. So like, move on, brother. Move on, bro. All right, talk about my all right, that's it. So again, starting this thing off. Again, peace, power, probably get everybody that's here and obviously within the panel here. Over Caesar, over Chris Logic in the building, right? So it's Camille Gain in the house, over Brandon in the building, also awesome brother Rich B in the house, over in the house as well. And so we're gonna kind of, I should say maybe fill in the gaps where we were last Thursday when we speak about a lot of different, aspects or strategic vantage points of how to look at the market, trend related, fundamental related, that symbiotic aspect between the equity and options, of course, how that folds into different indices and itself or indexes, and that being the topic that a lot of people are more concerned with, which is the bonds, right?
Yes.
And now it's like, okay, bonds, if not that, booms, right? Booms or bonds. Y'all know how this stuff works, right? Those are the hot button topics right now, of course, dealing with the ideal that the markets are very sketchy. And I say that because there's been a heavy, big rotation. It has been an obvious rotation out of tech into some of these value plays, these off the beaten path, downtrodden plays that were kind of left for dead, and their cyclical nature is now starting to provide them a platform of buyers to come in. We have the reopening trade. Of course, we know a lot of those assets are more, what they consider to be hospitality kind of like sectors, hotel, restaurants, even Cheesecake Factory just been on a tear, right? I hit that thing way back, maybe two, no, last earnings? But again, since it's bounced after the last bill we did with Trump before he left, those stocks always again begin to really catch a little bit. Again, Dave and Buster's, those kind of trades, again, they depend on a safe social environment for them to make money. Of course, you want to bring people into your establishment. So Dave and Buster's, Party City. Like, how many guys even thought about Party City? Right? Again, we're looking at Party City at dirt cheap price. When I say we meaning a couple people, particularly that had an interest in it. And now those assets have now grown legs and taken off, right? And so those are some of those cyclical plays. Obviously, value mixed in there too, but it is interesting watching these things obviously unfold now, and you're seeing these kind of off the beaten path trades are now starting to catch a bid. All right, so what I want to do again, we're gonna go to the charts like we always do. Then eventually here I'll get to some data points, obviously some PDFs or whatever that we can kind of pull from. So let me go here, share the screen here, and let's get over here to the charts. Of course, right now, as you see, we got the Bitcoin bubble up, right? They call it a bubble, right? But I call it a bag, bag in the making. So we know what Bitcoin is doing here, Alvis. As you see, we got a couple little trend lines here and there up there. It's doing what it's doing right now. It's still in an uptrend, clear as day. Since we already got the chart up, we'll speak about it for a hot second here. It's still in the uptrend. It's playing beautifully within the linear regression band here on the daily course. You see kind of little, from this perspective, how I had this little box set out here. And it's kind of taking it out to around a little bit into the late June time frame and seeing how this thing gonna play out in and around this, this axis here, pivot point resistance here at the blue lines. You can see there clearly the asset just pinging up against it here, even with the wicks, because we drew this line way back on this day, and look what it's did since then. It played right off that axis. Couldn't make this stuff up. So I love this stuff. Technical analysis is so important. It's superlative when you can really, put the market into a box and trade in around it thoroughly. And we've been able to do that pretty well with assets like the S&P 500 lately, and a few other assets. Of course, a lot of those stocks outside of the, the mother of all tickers, where they say the XPX. The SPY definitely is the most intimate stock that we're known, that is known, I should say, globally, because it tracks a lot of the sentiment of America's greatest companies, right? It's Fortune 500 companies, 500, whatever, y'all get it. But long story short, same thing with Bitcoin. So Bitcoin of late has been trading somewhat in correlation, right? In correlation or convergence to that of the S&P 500, which is odd because it was built to be a diversion, right? A hedge against equity markets, right? An anti-aspect of equity markets. And here it is, it's trading, along with the SPY. And that's because, again, I would say Bitcoin as a whole has now been somewhat being a more adopted state, so the institutional traders would want to get in. And so what people are doing, they're saying, okay, we're trying to front run the ideal of this Coinbase IPO. Right. So this is another way they feel like they can trade Bitcoin without necessarily feeling like they own it outright in their portfolio, because they still kind of looked at like that's a pariah, right? Now you trading Bitcoin, like really? Like it's kind of like the bourgeoisie type institutional traders out there, right? But they want in, but they're afraid to have it on their books, right? So we'll trade the Coinbase, right? Or we'll trade Riot blockchain, right? That's what they're doing, right? Don't make no mistake about it. That's what they're doing. But eventually they're going to acquiesce. So you're starting to see that with the banks. They want in because they'll never be able to survive going forward in the future unless they start acquiescing to Bitcoin. Their jig is up. In my opinion, I've said that many times. Actually, a year and a half ago, I said the banks are pretty much about done. They're on their last legs because they have no other true way to reinvent themselves after being spoiled for so long, thinking that the fiat currency business model will last, right? the test of time. As long as the superpowers stay in power, meaning these central bankers, they feel like, you know, they were safe, but guess what? They're not safe anymore. Right? Bitcoin came along and just threw, you know, hot water all in their lap, right? So they're gonna have to now reassess their situation. So again, looking at Bitcoin as a whole, again, the uptrend is still intact. Of course, this was the launching pad area, anywhere around this area here, you know, 17, but I would say around 10 grand, we would really start to get this thing popping. You know, it was more of a long, you know, straight line consolidation to a degree, coming off that September 19th area, flattening out, building the base, and then we start to launch a little bit. You know, it's kind of, you know, bring in the aspect of the consistency of the liquidity, right? The volume, as you can see, even on this squeeze momentum indicator here, you could definitely see the patches of green that kind of leads you to the idea that, you know, there was momentum building, right? There was definitely momentum building. Actually, like I said, coming back, you know, I would say even around during the time when we had the March lows because of the COVID scenario, when everything got gutted, because everything dropped, gold dropped, oil dropped, again, equities dropped, even Forex market was all out of whack. Everybody got gutted because of, you know, because of COVID, and then money started slowly rotating back into some of these assets, right? And so after that point, I think it was game on for definitely for Bitcoin, because after those stimulus checks came out, it was airing apparent like, I'm gonna go buy me some Bitcoin. That's what a lot of people started doing. They use those checks to buy Bitcoin, and they're eating beautifully now, right? I mean, even if they bought, you know, a little bit of worth, you know, $1,000 worth or whatever, back during the March, or excuse me, the COVID lows, when it was trading at around about near $5,000 a token, somewhere around there. Well, look how much they up now, and that thing's sitting up here at 50 grand. You know, of course, like I said, we've been in Bitcoin since way back in like 1900. Meaning myself personally, I'll speak for me. I was trading Bitcoin around $1,900, $2,000. Right? Rolled out the top, sold a little bit, left a little bit in, been adding, you know, on certain strategic aspects, playing the technical game in case in Bitcoin, because, you know, the fundamental game for Bitcoin is just what? It's a very simple scenario. The use case is there, right? The aspect of the blockchain is here to stay. The institutions are having a problem with it because they feel like there's no fundamental case stored for it. Well, I beg to disagree, because again, we're still having a synonymous or a symbiotic relationship between the blockchain technology infrastructure, this immutable ledger that everybody needs to have when it comes to record keeping, and that way you kind of eliminate the book cooking chefs out there that kind of, you know, for negative financial. Well, that what it keeps that from happening, right? The error aspect of bookkeeping obviously goes what to the wayside, and that way banks can't throttle you and scheme off the top and make more money off you than necessary. And so it exposes a lot of the financial sector. So now the old vanguard of the financial sector as a whole has been turned on its head, and the new players out there are surrounded around a new or a hybrid aspect of the financial sector. Anybody want to take a stab at that? What is that new hybrid industry of the financial sector? Anybody on the panel here? What is the new hybrid financial sector now? Anybody want to?
Like Cash App and
Yeah.
So what is it called? What is this actual sector called? You're 100% right. What is it called?
Cash App.
No, that's the name of the company.
Oh.
What industry does it fall underneath though? What is it? Say again. Somebody about to say it.
Fintech.
Bam, fintech. That's exactly what it is, which is basically what? Financial what? Technology, right?
Technology.
So it's a whole, that's the wave that we're going to. The relic aspect of the bank, insurance model, all those guys for them about to become, you know, fossils, right? Financial fossils, financial dinosaurs. They still gonna have a strategic place. However, fintech as a whole is where a lot of money is finna fold into. It's been happening already on the blockchain side, and it's definitely moving towards that now, obviously on the equity side. Look again, Square. Why you think MasterCard's now adopting Bitcoin? Visa, right? They want in, right? Again, PayPal late to the party. When did PayPal come? PayPal came late, right? They were too busy trying to play the political game and missed out on a big bag, right? Square was like, no, you know, Jack Dorsey, off in this case, y'all know Jack Dorsey owns PayPal, that owns Twitter too. You know, look how long it took for PayPal to come in. PayPal and Venmo, they came in way up here around about what? In the 12,000. Square, Jack Dorsey, those guys were in way. If I'm gonna scratch this down, Jack Dorsey and the crew was in way down this area around here, like 4 or 5 grand, somewhere around there, right? I think he was buying something even back in 2017 to be exact, but a lot of this stuff didn't become public record, like a 13D filing or something like that, right? Or 8K, whatever, updating the investors until, obviously last year in 2019, somewhere around there, right? So you think about when Cash App actually made it available where you can now buy Bitcoin. Well, that brought a lot of new people to it that necessarily didn't have to deal with the ideal of the security, thinking that, they didn't want to trust these different platforms. They weren't sure about turning the international ones. The ICO craze that got gutted out, of course, that made them feel more secure, right? If you're not going to buy it through Coinbase, then guess what? You could buy it through what? Cash App. You see what I'm saying? So it really opened up a more secure window to people that want to get in. So again, that money also became a highly, highly liquid highway for the asset to now, build off of, right? So of course we see all the ebb and flows that Bitcoin been going through, but ever since they hit those, those lows, the lows way back when it bottomed out around about $3,200 here. I mean, we're talking about going back as far as 2018, into 2018. When the tariffs always became a major issue for the equity markets, as a la Trump, right? People started trying to find ways to hedge, right? Again, gold or that of crypto. So it became a fueling station for some of those people who were trying to move their money around to different allocations. And so, like I spoke of just recently in one of our previous training sessions, that now that we're, getting that more main adoption, adoptive state from institutions, the portfolio structure of the 60-40 rule starts starting to change, right? You guys familiar with the 60-40 rule, right? We talked about it several times.
Yeah.
Right? So what is that 60-40 rule for anybody want to tackle that for people on the YouTube side too?
60 stocks, 40 bonds.
So that's basically what it is: 60% in equity and 40% in bonds, because bonds is being, the defensive play against, backstopping the debt, right? Now, again, they're starting to bust up that model, and you're getting somewhat like 60, 30, 10. Some people doing 60, 20, 20, right? 20 bonds, 20 Bitcoin, or within that cryptocurrency, so to speak. Right, some of the top tier, obviously equity, but cryptocurrency obviously out there. Of course, everybody plug and play their own particular coin they like, but definitely, just from my opinion, the more adopted states are coming in, obviously under what Bitcoin and Ethereum, right? Litecoin used to get a little play, but it's not necessarily getting the play that ERC20 is getting, obviously that of Ethereum, and that are just what Bitcoin brings as a whole. Right. So, but there's others out there too, of course. I'm not being biased towards those too, because I got me some altcoins that's been popping. And I'm pretty sure some of y'all as well. But anyway, again, just using Bitcoin again here as a start off conversation. Again, that's why, you got to be very, you have to be excited, because again, with the aspect that they're going to play this convergence until the wheels fall off, then it is a good sign to model the S&P 500 under, to a degree until it starts to diverge. And you can kind of tell directive values to a degree that there's strength behind equity markets if the crypto markets are kind of still in the uptrend, right? Again, once they diverge, then we'll deal with that. But as you can see down here at the very bottom, the blue line is my comparative chart analysis indication to that of this in this case, Bitcoin. And so it's kind of trading opposite, similar to it. If you look at this here, it's almost similar here, right? So that's important. All right. So again, as of now, Bitcoin fighting. Again, I'm loving the strength. I'm loving the new adopted state by institutions now starting to come in, and before you know it, again, I do believe, me personally, if we just even play the linear regression game here, of course I say the game because we don't know, all right? But if we just play the linear regression game, let me type it down. There we go. That puts us, I mean, hypothetically, this is hypothetical. Don't y'all take this like a grain of salt. Again, disclaimer. These are just my opinions, right? Right? That puts it, and that's at the best case scenario. Again, we talking about 170,000. Yeah, that's stretch. But even if we split the difference and say, well, 50 to that now, that still puts us in around maybe 100 grand to possibly around maybe 120,000 by the end of the year, given the fact that we don't have any kind of massive problems, right? Again, that's a stretch, but again, this is just based upon how the linear regression brand or this logarithmic chart is trying to price in time, right? That's why when we look at our x-axis and our y-axis in terms of price to time ratio, we're trying to establish that kind of forward, valuation, right? Companies do it all the time, of course, on the equity side, but Bitcoin obviously has that same model in play too. People like Tom Lee, right? Tom Lee is one of the biggest, crypto bulls out there as well, but he is also a really good analyst when it comes to what equities, right? And so he has some of these price targets, sitting there and around those areas. Of course, Kathy Woods, those type. Even Elon Musk has been gone. He got bit by the Bitcoin craze, right? And then we had one recent convert recently. We spoke about that the other day a little bit. We had a recent convert that was one of a real big bear of crypto. He has now been converted. He drank the holy water, right? Mr. Shark Tank himself,
Really?
Kevin O'Leary. Yeah, he has now been bit by the Bitcoin bug. He was also pushing back against marijuana because he kept trying to play this old federal, Schedule 1 drug and all that, but he wanted it in. He can put it in his portfolio, man, because they didn't want some of his donors to look at him sideways. But now he also acquiesced over there to that space a little bit. Guess what he now also is invested in besides Bitcoin? Psychedelics. What are our psychedelics? Right? The mushrooms, right? Things of that nature, right? No, there are actually ETFs and stocks out there surrounded around psychedelics, right? So they're now starting to get involved in those things. So I think the market is starting to open up to a whole new different, I don't know, classification, so to speak, of how people starting to look for opportunity in this emerging market space as a whole, right? Even with the assets themselves, it is really opening up a big war chest. So I'm excited to see it. Anyway, but that's it. So again, that's what we're looking like here again in terms of Bitcoin. Again, Bitcoin in the uptrend. So guys, we'll watch it. It's been pinging up and down this linear regression band, like a surgeon. Yeah, peak to trough, right? Y'all know how we like to trade, right? Here's your peak. It's coming down, testing your trough. It's just doing this thing like gangbusters. And the great thing about the technical analysis with Bitcoin, the tighter the peak to trough, areas begin to kind of tighten down, is very, very important because now you're starting to have what? Momentum building, right? If we had the Bollinger Bands up, you'll be able to see that momentum starting to kind of really, show itself. So it's trying to set up itself for another opposite major, either breakout or, a test of some level of support. So the way these sine waves are starting to tighten up here, so it's wider here, right? It's obviously starting out this base here and it's starting to tighten down here. That means, momentum is starting to coagulate in that asset. So it's either going to cause another big, nice little pop, you know what I'm saying? Probably run another, 10, 12,000, right? Or it's going to kind of hover around these levels of support. In this case, we're playing off the what, right? In this case, I should say, we're playing off the higher lows in this perspective, right? We use higher lows in the uptrend as a level of what? Support. And, as of now, the strength of the most, I would say the base one is still going to be around this 44,000. Now, the pseudo support that we all playing off of right now, of course, easily is around about 50 grand, right? Market's moving what? Whole dollar, half dollar chunks, right? Again, 50,000, right? 45,000, right? No secret there. 55 grand, right? That's where we trade in around now, right? Look here, 54,000, 54,000. That's where we're trading at this point of the pseudo support, right? So not rocket science to trade in and around those areas of support once you learn how to diagram and put the market in perspective, right? Does it make sense a little bit, right? And we use the same technique when we go into equities too, right? So with that being said, let's run over to the equity side of the house and let's get this thing popping. So what I'm gonna do today, again, we're gonna mix it up a little bit. We'll do the round robin scenario like we did before. So if you guys have any particular assets that you want to look at strategically, we'll dissect them. We'll again canvas every aspect of it that we can to make it more lucid, and we'll just build off that, right? Again, everybody that's on the panel now, do you have a particular asset that you might want to look at, equity at, or options? Definitely open your mic and let that be known. What
about Ulta?
Ulta. Okay, so Ulta Beauty Store. Of course, you guys familiar with Ulta out there. If you got the women out there, if you got a little wife out there, to look there, friend. No, but Ulta obviously has male products too. But looking at Ulta as a whole again on the daily, we started with the daily first.
Yes.
Right? We always backtrack and go into bigger time frames instead of weeklies and monthlies. But the daily is always the most superlative chart readout that most traders always start with when they start to do their technical analysis. Why do people use the daily chart? All right. And if I ask somebody, any of you guys that's in the panel here, why do we start off with the daily chart first? What would be the positive to start with the daily chart first?
Well, it gives you oh, go ahead. Whoever.
Ladies first.
Well, it gives you a aspect of the higher time frame, and also the higher and the lower time frames, but it's not doesn't take as long as the weekly or the monthly. So that's more or less for dealing with the daily. That's for day trading, as opposed to waiting for moves on the weekly and the monthly. That's like swing and swing trades and people that are long-term holders. So the daily gives you the best of both worlds. You get the picture of what the high time frame is doing, and you can also get your entries from the daily and kind of do the micro view
Managing of it.
Yeah, as you go down into the smaller time frames to set up your entries.
Very good analysis. Now, here's where it also gets interesting. In trading options, how important is the weekly and the monthly too now?
Oh, it's
now
very
that you
important.
have more of a bigger window, right? Because we're not doing more, even though you guys definitely know you can day trade options, but now that those weekly option contracts coming in, obviously in a 7-day spread or that of a 14, right? Some of them obviously is tipped out a little more, right? But that's how contracts are set up through, certain aspects of turnarounds or of market market windows, so to speak, and turns around quarters or certain strategic quarters, 13D files in the case in that regard, where some fund manager kind of pile in there in certain areas of a cyclical season, and that's why you had that gap between some of these stocks. Expiration, closing days, as opposed to what the weeklies may offer with some assets because they're more liquid. And you'll see that, right? Because like this week ended a massive overhaul of options contracts that was set in motion since way back in December, right? And now you have some of them now are setting up for the next particular month aspect or that of the month. So you got some April the 16th contracts out there. For some assets that are very thinly traded. And that's kind of moving into that first quarter kind of window of where they're going to start doing some more turnover ratios in terms of 13D filings, whatever the case, you'll get a bigger picture. So they contracts are set in motion all the way to the end, right? Because it's obviously set in terms of who are writing the contracts, right? Not somebody buying the premium outright, but writing contracts, writing, puts, writing that of what the calls, right? And that's a very intricate aspect too. I need to pull that PDF up, but I'll get to it hopefully. But no, you're 100% right, Ibn Camille. So the importance of different bigger time frames to just give you a more lucid picture. So using OTA here as the case study here, you see clearly what's going on here. And we had to look at this just, from a basic optic perspective. What do you see here? In terms of OTA, I said we'll go back as far as, October 2020. Leading into his last Q3 earnings are always around December timeframe. Now it just gave his Q4 earnings here recently, right? What do you see in this trend right here, Ibn Camille, that has your interest?
Well, that gap, you got that big gap, and then you also have
your near-term gap. Is that what you're saying?
Yes.
Okay, and keep in mind now you guys do have the ability to write on the chart, so click your annotate buttons too. As again, we're in workshop mode, so you'll be able to draw your gaps. You'll be able to draw your lines. So just utilize that too.
Let me come through. Hold on.
Yeah, no worries. Take your time. What's going on again while she's getting ready there? What's going on, YouTube family? Too again, thank y'all for tuning in as well. Welcome to the bill. Again, we're getting in a little bit, doing a little training. So happy to have you guys in the house. If you got stocks as well, we'll get to you guys too. So we're gonna get through some of the main, question that we have with the people on the panel. Then we'll kind of free fall that thing. So thank y'all for coming in. So we have Oba Ali in the building. With our family, Niger Valley Civilization in the house. Our family, Tirika in the house. Right, our family Max Bird. Our family Luminous in the house, and Oba Maniac in the house. Mr. Maniac in the building. Right, happy to have you guys as well.
What's going on, Maniac?
Seeing me in the house. Right, you were the first one in the door too. So happy to have Oba in the house as well. So thank you for coming through as well, family.
Do you have to turn something on because I don't see the annotate button?
Right. Yeah. So it's tricky. Like I said, you got to go near the. Where was it last time, guys? You have to go near where it says screen share.
It was
And it
up
should,
top, I thought.
right, it
Uh,
should be where your view options at, and it should be like a little drop down button that you can click on or something possibly. And
View
it
up.
should,
all right, let
yeah,
me
view options, and you should be able to see it. And
view
it's
options.
and you should be able to where it says annotate. Everybody that does have the privilege to annotate.
Oh, okay.
Um,
View options. Let me see what's in here.
right, it should be like a little pencil or something
Okay.
like that.
I got it. I got it.
Mhm.
I didn't look far enough down.
No
Okay.
worries.
So looking at this gap here. That's my drawing. Hold on. Let me get my
And if you
my
can, like I said, make it, you know, can make it visible as possible too. So if you have to thicken the line out or whatever, a color one that's going to pop out, make sure you edit it to your liking.
okay, let me find the colors. I'm gonna do this.
And while she's getting that together again, like I say, Ulta is, of course, you know, when Ulta was in its, I should say, not necessarily the heyday, but when it had its prime breakout, that was obviously doing the mix of the Kylie Jenner boom. And she brought a lot of liquidity to the asset. Again, the woman power reality behind that too. So again, I remember it cycled out in the mid to low hundreds, and it just took off and went up, you know, way up there in the high 300s, you know, because, you know, she became the somewhat, you know, front or the face of Ulta. And since then, it's been trying to rebalance a little bit because, again, they lost a little bit of her business. You know, whatever. Again, the stay-at-home trade because of COVID, a lot of other things kind of began to hurt that industry, but it's still bouncing pretty methodically here after retaking the $300 area. Of course, going back here, like I said, you know, obviously before the COVID scenario hit and it bottomed out, literally around about 127. It fought its way back best it could, at least to get back over 200s. And since then, it's been trying to, establish a new trend, right? Because again, going back to basically the highs, this thing was set up here near $367 odd, right? 370, right? And so you see what's going on here in the bigger picture. And while she's going to break that down, I'm going to put your box back up there too. No worries, Sister Camille.
That's okay.
You see the massive picture here, what's going on here, right? If we look at this from my natural observation, what do you see right here, even going back at the previous highs? You see a big old, what kind of pattern is that? What kind of pattern is that right there?
Cup and handle.
Right? If nothing else, it's a cup, right? Or a fry pan bottom or a U-shaped bottom, right? Because they're obviously still building it out, but definitely can end up unfolding and becoming that of a cup and handle pattern, or just like at this point, just a rounded bottom, right? So like lately, been using that rounded bottom and rounded top schematic, right? Until those things really kind of max out and give you that kind of perspective, right? If it's going to be, that kind of party. All right, so we'll see. So let me get your box back in there. So there you go, Ilva. Make sure I have it in there correctly.
Okay.
Is that we there now? Is that about where it's at? All right,
yep.
Awesome. Yeah, so give us your breakdown real quick here.
So we have that gap scenario, and then below the gap, we have a few lows here. So I would mark this as an area. It's not, hold on, come on here. I was trying to use this, okay.
And let me know if you need me to blow it up anymore too. I know we might have to resize the box, but if that's fine, we'll keep running it. So
yeah, you can blow it up some more.
Blow some more? Okay, so let's do that. Go ahead and blow that area up, area of interest.
Yes.
Better here.
Yeah.
So all you gotta do is just reposition your box again on your side.
Okay, I'll come back to that. But I'm trying to draw with one of these tools here. It's not letting me. I don't know why. Maybe I got a white color. Maybe I'm not doing it right. So if I want to use this, I want to just draw a straight line. I'm not able to do it. Maybe I should use the pencil.
Yeah, because they do have the trend one on there, but yeah, if it's acting, it's inside the drop down of the draw drop down tab where you could draw like boxes, circles, waves.
Yeah, I got that. Let's see if it'll act right now. Can I get some act right on this thing here? Do you have to hold the mouse? Okay, there it is. That's the
Mhm.
problem. All right, so got that. Because even in this, you got a bunch of gaps here that need to be closed going up. Then there's a possibility. Okay, let me just across, cut through candles. Let's see. So then you have this. I'll take it from here. I think it's a better area. You got this area.
It haven't showed up yet too, just in case on the screen. Unless it's a small delay.
Oh, you can't see it?
It's only just showing your box, the old box still, just in case.
It's not showing on them lines I drew?
Yeah, it's okay. It just popped. I'm sorry. It just popped up. Yep.
And
Mine might
then
have been delayed.
then we got this gap area as well. So I'll draw it out into time. Oh, goodness. Oh, okay. Yeah, so that's kind of, and then could you wait, let me fix this. Fix this box. I guess I get rid of the old one. So if I hit clear, it won't clear everything, right?
Well, you can do what they call it, just back clear one at a time, undo. Like if you don't want to wipe out everything, just do undo.
Let's see what happens. Okay,
Certain ones, or click the certain boxes, and then you can maybe. Yeah, there you go. You got the other box off. The big long one is off now.
Yeah, I want to put this other one here. So I'm looking at, let me go here to here. Actually, pull it down to the body. And could you scrunch the chart? Because I want to go up to where the highs were.
The old highs.
Yep.
Ooh, that's gonna mess your lines up just in case. Cause you,
Oh, okay. We'll leave it then. We'll just do it right here.
and I'll just put
And,
like the price is at 367. So just on GP, whether it matter or not. But if it matter follow along, the old highs, let's say 367 or we'll say 368. Right, that's the old previous highs.
okay.
For ATH or all time highs, we'll say that. So then we can come back and do it later too, just in case.
So these are the highs here. This is where it topped out so far. So with Ulta, I'm looking at, since that gap is the closest, going fill the gap, maybe peak up a little bit here, above these highs, equal highs here, and then pulling back to these lows, or even further. It'll probably take a little longer though to fill this big gap here. But and then you got the lows down here. So that's kind of what.
So you got a net positive around about what? Or excuse me, a net difference of about what? 20 points to the bottom of the gap, 20 some odd points. Right?
Yeah,
so you're sitting at 321 now. What's your bottom? What's your bottom's your bottom resistance here? What price target would that be for you?
Where the gap is, or here.
That you're playing for far as your resistance. So you want to use the top of your box, your white box, or you want to use?
I would be using the top of this white box,
the box
bottom of the box.
That's what false resistance. False resistance.
Oh, okay. Yeah, as far as my resistance, that would be what, like 339, something like that, somewhere in there. 336. 336, and then to the top.
At the very top. So that's 349. Okay.
Right.
So in your thesis in terms of 336, why 336? That's your top at this point, your most nearest resistance box.
Well, that's the bottom of the candle of that's the bottom of the gap, like where the candle where it gapped up in that space. So you have that gap there.
Is it this? So, and I'm using, you know, I'm doing like in chalkboard, right? Professor mode, right? Is it this guy right here? Is this why? Because this wick right here. You can see my drawing on the screen.
It's the green one.
It'll pop up in a second.
Let's take it. Yeah.
Can you see mine now, by any chance?
Yes, I see yours. I'm looking at more or less that red solid candle because you know there's no volume in the wicks. So
right. So this guy right here, this one here.
Yes, sir.
That yellow one. Oh, it's the red one. They're using the red one.
Yes.
Okay. So, again, I know it's probably low in terms of, you know, I need to probably scrunch it up a little more, but I got a base of that candle sitting at around about 338.81 on the daily. Is that what you got, or are you saying something different?
Wait, let me. I got the chart up over here too. Let me see.
You know what I'm saying? I know that's when you blow them charts up, they begin to be more lucid. But the base of that, the base of it is sitting at 338.81. Would y'all be agreeing with that? Everybody in the back panel as well?
Okay.
Or y'all seeing something different too?
The base of the red candle that is at 338.999.
And so you saying right at 389?
Yes.
339. Excuse me, 339.
It's 338 on my chart. 338.
Right. So
338.81.
Yep.
Is that what y'all got? Y'all tracking that too? Everybody tracking that?
If you take it from the base of the red candle, it's 339.73 something. Yeah.
And you on the daily, Eva Camille?
Yeah, I'm on the daily.
339? Really?
I'm seeing 338.82 basically, or 338.81.89. But
y'all talking about the top of the candle, like the bottom of
the base,
the base of your
bottom of it.
Yeah, your base of your red candle that your order block is setting up on here.
Yeah, that's 338 on my chart.
Yeah, 338.81.
81.
Well, I'll take that. I mean, that's fine.
Okay.
Now realize, because again, from this vantage point, like I said, that's why I said I might need to squeeze. You know what I'm saying? Expand it more, but I don't want to mention loud at this point because you got them looking pretty. But the base of that red is sitting right at that point there. Matter of fact, I draw. Well, let me change the color on this one here, but I draw. I put my little line up here. It might be off a little bit, give or take.
Right.
Let me put it there, and let's see the color that I'll change the color to. Let's change the color to like a red that way. Okay, you see my line up there now?
Yes.
That's sitting right at that red, both of them, because you see over here to the far left, you got a peak there. Clearly this guy right here, and then you got the base of that red candle, so that all the old support, old resistance became now what? New support when it broke out above it. All right, it had that window of area here, and now since then it has now pulled back, right? And it's trading, obviously belong the gap down, but that will be the box in this area here, right? This little shaded area here.
Yes.
Yeah. So go ahead. I'm sorry. Go ahead. I'm going to cut you with some too, but
no. You rock out. And you know where those candles are, the ones to the left, the ones that where you had your hot pink. And within those candles as well are gaps that have to be filled. So when you open them up, when the candles aren't connected, those are also areas that they move the price action to seek liquidity. That's inefficient. When you get those gaps in between candles, and you get those wicks.
Would you say that's a fair value gap, Camille?
Nah, that's not a fair value gap. The fair value gap is underneath the fair value. Okay, if I point you to where the FVG, right? The FVG, the fair gap, the fair value. You can see my pointer?
Hold on. Where your screen at?
You're gonna have to draw on it because it's not gonna allow
Okay.
you to do the pointer without it, a mark. So just
I'll do it.
draw. And you also can type on it. Keep in mind, you also got text purposes. You can type certain area
Are
too.
y'all operating the same screen?
Yeah, because
Oh,
in the
okay,
Zoom,
okay.
it's in workshop mostly. Keep in mind, y'all can type into it too. You can type and draw the lines and the whole nine.
Okay.
So this is the FBG to your left.
Where you at? Okay, okay. Yeah,
Y'all see it now?
yeah.
That's
I agree. Yeah, that's the
right.
fair value gap. Yeah, because it made strong moves to the upside. The
Right.
strong impulsive moves. Yeah.
Right.
Okay.
So that's what I see. If you come down there and fill in all of that, that's I got a bunch of gaps there too. Shout out to ICT. Yep, that whole you can make that circle go all the way down to where I drew that white line. Down, yeah.
Oba and ICT together, boy. That's hot fire lava.
Hot fire, hot fire, hot fire.
Yeah, we've kind of put it in that I know it ain't gonna be 100%, 100% accurate, but y'all, we kind of right at it,
Yeah, that's good.
Hey,
that would be the FVG here. And again, you see, you got these gaps in here. Price.
Oh yeah.
Price didn't close. So anytime you got those wicks and the gaps like that, because there's no volume in wicks, that's inefficient
Right.
price action.
Exactly what it is. Or we like to call it spoofing, right? Right, a lot of spoofing and all kind of people trying to the indecisiveness, right? That's what a wick literally details. It's a lot of indecisiveness that are sellers and buyers, people adding orders and market makers running it, and then the true buyers and sellers obviously will obviously be left inside the meat of the candle, right?
Right. Yes.
So in this particular thesis perspective, right? Of course, you got your check down levels. Clearly, you got your fair value gap area that you're working with. Obviously, if we just using this, especially within the terminology or the analysis of using the linear regression band. For you guys don't know that's watching on YouTube, of course, this blue or purple or red line is called a linear regression channel or band. It's kind of giving you price action. Again, an x-axis or y-axis channel script. You're seeing, what's happening in around those within this, I should say, this price distribution over time, how it's kind of playing within that channel, right? It's kind of like doing all the hard work and lifting for you. Outside of the bigger band, you're now having to come in and put in your smaller windows of opportunity, especially as a trader, if you're trying to capture certain premium advantage point, like a basis move up or a basis move down, and using the standard deviation aspect of that against the S&P 500 as a model. You're trying to trade that price action, within those windows, right? Especially if you're trading options, because that's what we're dealing with. We're dealing with what? Time and money, right? So they say the ultimate understanding is time and money, right? So now that you got those boxes in there, direction of bias. Matter of fact, what's your direction of bias here? Are you bearish or bullish? Your direction of bias?
Well, bullish at first to fill that gap. That's the closest.
Right. So we're gonna work with your I'm gonna have you say it because we're gonna work with your most eminent bias, because you got to start. Of course, you can always do a backstop if you're doing options. You can do options. You can hedge it. You can straddle it. Strangle it. So different ways you can do it. Hundo, butterfly, whatever. But from the option perspective, right? What's your most direct bias?
Bullish.
All right, so I'm gonna write that down here. So she direction of bias opposite bullish at this point. So where's your target? Where are your short-term targets?
My short-term target would be above this. What is that? 350?
All right, let me get my crosshair up here, cross line. Okay, 350. I'll say. What time frame you putting on that? If you had to throw one in there, be it one you already studied or a hypothetical one, what you might be looking at as far as the time restraint.
The 15-minute.
No, meaning time time to complete
Oh,
your window of execution within this trade.
okay. Well, that's short term. So I would think, you know, if I didn't get the top, I would at least get the median candle, and then it would fall. So I'd give that, what are we, 321, maybe 3 days.
You think about 3 day window? 350?
Yeah, 3 to 2 days. It might, because I mean, I don't know how fast Ulta moves. Like, does it, you know, what's his ATR?
I gotta stop you there. See, there's $1 million question. That's why training this way. I love this stuff. I love this stuff. I can't wait to say I love my dad. I love my daddy. Right? Because now we're trying to marry price action with what? Time. That's what the option market allows you, because the flow chart gives you a directed value how people are trading in around what? These price actions, these pivot points, right? Peak to trough, right? It's a little different than just a technical what? You know, breakdown in itself, because if there's any particular candles out there, right? Ahead of that, right? We had a earnings drawdown, of course, what? Back on what day? On the 11th of March, right? Everybody clearly could see they had earnings on the 11th here, right? As you can see the numbers there, they came in at what? I think was $3 and change. You can't see it over the line, but anyway, the stock gapped down, right? They kind of came in pretty decent, but they gapped down because again, they were just undervalued in terms of their numbers, right? Now, within that, of course, you fell from a high point of resistance because it was already inherent that they were struggling to break out at that point, as using this bar that you put up here, which is a clear resistance here. I mean, she's 100% on point at this resistance here, up around about 350 here and change, based upon this last candle hit this wick here. But y'all know, again, we've been really stressing the ideal of what? Rounded tops and what? Rounded bottoms, right? Markets have been kind of trading with that level of clarity of late in a very elusive perspective. So if you look at this from on the daily chart here, leading into earnings, of course, you had a nice move up already, right? So when we think about earnings, we're talking about what? A 3-month window of opportunity, right? That we're dealing with price action. So around the end, to a degree, around the end of that of December timeframe, mid to end of December, right? You're kind of getting that that initial push to kind of move into the this 3-month readout of the quarter report of what Ulta was doing. Now, rocket science, right? What is Ulta? What sector is Ulta in? It's in the what sector?
Hair,
what sector?
Beauty.
It should be Ulta.
Y'all
Should
said
be
it. Hair, beauty, right? Cosmetics,
yeah,
right?
Yeah, beauty.
Right?
Fine.
And that's a subsector, right? So it also falls under what also sector that it falls on in terms of like indices and aspect, right? You got what? Consumer staples. You also got things like the consumer discretionaries.
Consumer retail.
Now, hold up, because then we're talking about S&P Spiders, right? So in the S&P Spiders, it would be on the what? Consumer what? This is more of a splice. I'll take that back. This is more of a hybrid. It's definitely gonna be on the what? Retail, right?
Yeah,
You got
retail
brick and mortar,
sure.
right? So we got we got land, we got all that stuff. So that falls. What is the ETF for retail? You guys remember?
Is it XLR? Not XLR, right?
LE?
Say again.
I think it's XLE.
Close. That's energy for retail. Think about it. Retail, it's gonna be anybody else? XRT. So it's in XRT, right? That's the retail, right? That's your Macy's, your Nordstroms, your all those guys, whatever. And then there's also consumer discretionary. Consumer discretionary is always like it says, these consumer discretionary items, things that people buy that feed that the indiscriminate buyers, right? That luxury. These are luxury items to a degree, right? That people obviously even gravitated to during COVID, right? They had to have something, not super stable, but discretionary items. But in this case, we'll just say XRT from this perspective. And if it's in that XRT actually ETF, we can actually see the weighted value what Ulta may even play in that, right? Because it is a very liquid asset, not just on the price premium, but it does garner a little good, good little allocation from a lot of different portfolios. And I'm saying that because again, if you think about it from that time frame going into the Q4 earnings report, you see where it kind of hit your again, at this base, well, I don't even call it base support, but at the point we'll say basic point, and after it gapped up and kind of, popped out around about 290-ish, 295, anywhere around this area here, it came back and tested this area here, held support, this little pink area I just scribbled on the chart here, right? And it launched from there into its earnings report. So you actually picked up a premium of roughly about 261, and we topped that around what, 350, right? At the top point of this calendar here, into earnings, right? So how much is that in terms of a percentage gain into earnings? Anybody want to do that math? All right, so when we're trying to establish a percentage gain, what's the mathematical equation we use for percentage? Which mathematical equation do we use to establish a percentage?
Multiplication.
Percentage. Percentage, we do what?
Division.
It's a division, right? You're dividing, right? You're doing a what?
You try
A top and a bottom, right? So it would basically be what? That 350, by that of what? By way of what, the 260? Somebody want to do that math real quick and get me see what you got? Let me know what you guys got when you pull that. Matter of fact, let me go do it too, right? Some of you math whiz can probably do it on the top of your head. Y'all used to money, right? Y'all used to getting money, big money, all right? So we talking. Say again.
Well, it's
what you got?
350 divided by 260.
Yeah, we got two. Yeah. And so these are whole numbers all in this perspective, right? So you got your again, you got your top base, and you got your bottom base, right? So what's that? So that'd be 350. It'd be the whole numbers, right? That means the big number go on top, right?
Yep.
And you divide it by what? 260, right?
Yep.
Right. So in terms of a gain, how much is that?
134.6.
And you got to move your decimal, right? Keep in mind, we're doing percentage. So how many times you gonna move your decimal?
Two.
On whole numbers? On whole numbers, just complete whole numbers, just 3-digit whole numbers. You move it how many times? You're only gonna move it one time. If you're dealing with 3 digits and whole number blocks, right? You're gonna move that thing, and obviously, with no points, so and so. And since we're using whole number, we're not using like 261, whatever. All right, and it's a proper fraction, it's not an improper fraction. So you're gonna move the decimal one time. So if you move your decimal one time, how much? What is that over Rich? I think that was you speaking.
13.46.
How much?
13%. 13.46%.
Right. Everybody in agreement with that? Anybody wants some smoke off that? Anybody wants some smoke? Nobody want to test it? Okay, so that's a 13.46% move into earnings on OTA, right? That's a nice little bag, right? That's a nice little bag leading into its earnings play here. Of course, we did this, again, peak to trough move here, simple by this little blue line here, right? Which is a really nice move, again, over that 3-month window into earnings. Hence, and I'm saying that because if you're thinking about it from a fundamental perspective, coming into earnings, if they came in at their numbers in line, and obviously they already had kind of got a lowered guidance coming into earnings. But the one thing that Ultra had in its favor is what? Holiday season, right? This is a cyclical play, is it not? It does well during what? Cyclical times of the year, right? Seasonal aspects, right? This is Thanksgiving, right? Black Friday, y'all get into what? Christmas, right?
Easter.
Right. Well, no, this is fourth quarter. So this is again, November, December, all that money kind of coming in from that perspective. End of October into obviously, end of January time frame, right? So that's that window of opportunity of people spending money into that end of the year holiday blitz. Does it make sense?
Yes.
So a retail store like this, even if you got people packing the stores out, they still had an online presence, right? They got an omnipresence, right? The online commerce perspective obviously was very valuable for them in being able to add fuel to the fire. And I'm saying all that to say because, again, when you're assessing the stock into a particular catalyst, like a fundamental catalyst, like an earnings play, well, there's a lot of factors that kind of what gives you some, plausibility whether you think it's going to be any more further breakout from it, right? If it's not topping out and your RSIs and your oscillators and all that stuff ain't necessarily, really, peaking extreme. Or you may be at those areas and people still say, well, if you're not going to really blow those numbers out because they might have forewarned what their guidance is going to be, then eventually you'll have what? A little profit taking, right? Again, that's a 3-month, 13% move in 3 months. You see how that worked?
Right.
And so based upon whatever targets they had lead up into earnings, because, again, they have these little earnings targets. Well, then that will be somewhat the window what people might have been trading around. So real quick, if we run over to just hypothetically here on tip ranks, and we'll assess that just on GP really quick. And this is just a full, analysis or breakdown exactly how this stuff works. For a lot of you guys that's listening in, not here, obviously just on the post, but also on YouTube, when you're making a bull case or a bear case in your analysis, of course, from a trade perspective, well, just what it entails, right? This is the natural methodology process that you have to go through, right? So clearly here you see fair value of the stock, not necessarily the fair value gap, but the fair value that they're giving it on the analyst perspective is sitting at what? 338, and that's after earnings, just what, some 5-6 days afterwards, right? And so that number might have been, maybe down a little bit, up a little bit, who knows, based upon, any downgrades or upgrades that might have came, after the earnings report, but they're still saying that this thing is only worth around about what, 338, right? As y'all can see here, y'all see this here? Are y'all able to see our screen on
Yes.
I'm sorry. So that means at this point, they already kind of had it priced at around about what, 340, 330, whatever the case like that. Again, this is some like 4 or 5 days after their earnings report. So there's no secret why, again, when it was topping up around about 350, that they were thinking, okay, we already had a 13%, and then 14% run here into earnings, right? Give or take from the peak, or excuse me, from the trough area, right? That they was going to reign the register in this thing, right? And so not only did it obviously become a victim to the ultimate, destabilization of the S&P 500, which obviously trades and converted to a lot of these little other assets, right, into its earnings play, it just kind of fell a little bit out from there, bottomed out around about 307, 306, and it's kind of been slowly uptrending from that point on. Again, until it kind of reaches that, in their opinion, fair value gap, right? But not necessarily fair value gap, but fair value price around what? That 338, right? Remember I drew that red line right here, that 338.81 area? This little red line right here, can y'all see it still?
Yep.
See how Wall Street already had planned that to be what? They plan to play for what? This area here. Because they feel like if we can knock on this resistance door and get above that, then they can probably feel good about what? Pushing them a little bit more higher, right? Changing their what? Their ratings, right? See how they play games?
Yep.
See the games they play? And that's why I asked you, obviously, because we're going through training and you learning options now. When you start thinking about time to money, right? The time to money axis in option trading, you're trying to figure out where or how Wall Street is valuing an opportunity or a push based upon technicals, any fundamental counts that may be coming down the pipeline that may be beneficial for that of what OTA and the ultimate market sentiment as a barometer of how people may be feeling about buying certain assets like these, right? Retail market and how the XRT might be trading or consumer discretionary items like that. Does that make sense?
Yes.
There's a lot of moving parts, but once you begin to now put it all together in your head, you say, okay, that's why this makes sense, right? Because you can feel really ultimately bullish about a particular position. And the hedge fund or the big money be like, look, on the option side of the house, we thinking, no, we need a little bit more a little bit more time, right? So excellent technical breakdown. Now we finna marry your time with your technical support, right?
Yes.
We finna move into what? Because y'all know we use the 4 pillars, right? Of course, everybody got their own model, but y'all know over here, I like to use the what, the why, the where, and the when, right? Right? We already kind of established the what and why. We're obviously, fundamentally around, we're kind of playing around with the where and the when, right? To a degree, right? You kind of establish the where aspect of opportunity within that of your support or the resistance that you're sitting at now at this point. But now that's looking to be the support that we're trying to play off of in terms of the base here. on this angle here, if we were to draw a little angle here, and I just kind of fill in the gap here just a little bit, just on GP, not to mess up her beautiful chart because it looks stunning, right? But I want to show the family here exactly what we're talking about, because again, we've been trading in around some really awesome patterns of late, right? There we go. In terms of this guy here, well, it ain't gonna be the most, accurate because I'm using it from this perspective here. All right, but that pattern there off the gap down from this guy, and now you kind of building the momentum off this little base here and trying to capture, maybe a little bit higher. You're trying to capture a little inside this gap fill box, right?
Yep.
So the resistance of the gap fill box obviously is clearly what we're trying to get into. We're trying to get inside that penalty box, right? I'm trying to get inside the penalty box, right? Now that's where they got the milk and cookies. You want some milk and cookies? They're him downstairs trying to get some milk and cookies, right? The milk and cookies, got him excited. So if we use the 338 as a barometer in terms of even their price target, meaning the analysts, we already mapped that out before we went and looked at that resistance point, did we not?
Yep.
Your box, my little red line, the base of that red counter, you already ID'd it. Bada bing, bada bung. Now, let's take it over here to the what? Let's take it to trial, right? Let's take it to trial, right? How do we take it to trial? We go check out its options, its flow chart. It's going to be the concentration where money is sitting at or the lack thereof. Would y'all agree with that?
Thanks.
That's what we look at as that barometer, right? Because we're trying to see where all the money's at, because this is the hidden gem that a lot of traders obviously overlook in their trading. And hence, a lot of them get they get torched out there, right? It's that hidden piece to their skill set that can really take them to the next level if they learn how to follow the money, track it all the way through best you can, right? Leave no stone unturned. Beyond that, a level 2 that most people are trading around, you also need a perspective of where people are kind of, again, planning for that tomorrow's trade, right? So next week is obviously 326, right? So we know we got a 7-day rolling period, and I'm pretty sure before we even go there, that area is going to probably have a little bit more some teeth on it, right? That what we call the 338 area, right? Potentially. Now it may not be a full number, but it's going to be in around that area, right? So let's go take a try, right? So yep, clearly right here, you see what's going on already, right? 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 We use a thicker line or a more lucid line. We use black. So already, right? There you go, right there. Right? We use 337. We'll play in between that 337.50 to that the 340 strikes, right? Since we don't have a 338. Y'all with me there?
Yeah.
Right. So interesting enough, of course, you got some people sitting out there on a weekly basis. They ain't, it's pretty decent as of today. They're trying to play, particularly if they think that box has a chance, there's your probability. 73 open inches on the 340, 32 on that of the 337.50, right? Again, 6 to 8 open inches that were bought on Friday, 21 that happened obviously, on the 337 as opposed to 340. Now, again, those contracts 30 cents. Well, no, that's not right. That's what somebody bid it for. They tried. I would say they tried. All right, but no, you go to the last or that or the ask or the midpoint. So we'll say the last guy got in around about $1.14 a contract for that 337.50 put. Excuse me, call, and $1.30 for the 340 strike price. Y'all follow me there?
Mm-hmm.
All right, y'all follow me there? So it's a directional bullish bet at a probability course. That's going to be on the higher end of the probability curve. It was used the probability bell curve, right? But we know that's an area of interest because that's where they're trading in around those price targets, right? Now we know that marks like to move on $0.5 whole dollar marks. That's why the 335 looks actually more attractive. It's a $0.5 mark, right? Hence that's why it's red. Excuse me, it's a green. It has some kind of bullish sentiment. Obviously, closing out Friday in terms of a differential change, right? About 21 cents, right? In terms of premium accrued from Friday's trade. Right, so it picked up a little money for next week's expiration week for that contract. All right, so that's a really awesome day to see it in that point here, again, as a area of interest. Now, the stock in itself as a whole, of course, is sitting at, as a last price, 321.84. Again, that's about a 16, 17 point window, right? It's going to have to work, like a workhorse to get on up there, right?
Yeah.
And they're going to have to fight that of the what? The S&P 500 too. Going to have to fight in relation to the S&P 500 to not mess up its what? Its price action. So now we're sitting at that what? A 20-day moving average around about 325. And clearly, I can see this here. They're sitting at around about 324.89 on the daily as of Friday. And now, if we go to the options market again, at the money, right? At the money, the 325 call should have a little weight on it. Not a whole lot, maybe a little bit. All right, but we'll see. But there it is right there. 325 at the money is gonna cost you around about near 5 cents, $5 and change. 61 contracts were bought Friday, 94 open interest at that point. So a little expensive for that premium, right? But that's OTA, right? That's how OTA trade, right? So again, that window is still showing, some of the traders are still a little bit, fickle about that, but it does possess some kind of value on a bullish sentiment. Now we'll check that up against this, put the call ratio. But as of now, it still look like there's some strength in the uptrend that the stock is always moving. Because you said you think it has a bullish uptrend. I happen to agree. Right? I happen to agree. And the put the call ratio also kind of validated to a degree here. Look here, we got 544 contracts that came in for this week, for next week, excuse me, or this upcoming week, and the open interest around about 1,300. That of the the put ratio around about 1,000 even, somewhere give or take. Right. So yeah, so I think we got some a case to be built here in around that. And I would say, of course, if you're going to try to trade that for that value, let's just say hypothetical for an option trade, then your risk assessment at $1.13, $1.30, if you want to do the 340 strike or the 337.50, right? Of course, what you're risking there. That is going to be superlative if you cross inside your gap fill box, right? That gives you a high probability. I would say about a medium probability that you have a really good chance to close that out by the end of the week, at least somewhere near the 330. Because again, it does have a ATR, I think, if I'm not mistaken. I think they sit around about what? I want to say about $9-10 on OTA. It does make pretty decent moves, and it's been consolidating lately too. All right, so let's see over here real quick. So somewhere around about so $12. Yeah, so $12. All right, so any given day, on a good day, of course, you can get 12 points out of OTA. Right. So
it looks frugal.
Yeah. So, and I'm saying because now that you learn the options, even Camille, it's like 2-3 days. Now you say, okay, well, I'm gonna give it, on a good catalyst, it probably can make that, but definitely on an option contract, now you play up against that the option window.
Yeah.
Right? Now you can start to kind of strategically place that position into its proper perspective on an option perspective, right? On a flow chart perspective, where the money's sitting at, or where it may or may not be sitting at. You know what I'm saying? It's still up to depends on how person's sitting at it.
Is those contracts good for the week? I guess ending Friday on the 26th.
Yeah, these are the weeklies for the 26th. Yep.
Okay.
Right. But the most money, of course, is obvious that they playing for that 330 window first. I mean, it's clear, right? It's clear.
Yeah.
Because you're talking about the whole dollar mark. Again, sitting at $3 a contract for the $3 a contract for the 330. Of course, you see a little volume came in there at the 330s. Friday, excuse me, and it's open interest sitting at 287. So a lot of those probably rollovers too. And so of course, if you take it back to our chart, of course, that 330 area obviously is sitting right at that middle point, right? Again, y'all know I like to say you play the you find the top, you find the middle, then you split that thing down the middle. Right?
Down the middle, yeah.
That's why I read sitting on it. Not just because it just, it's good to say, but look at your resistance. Where you sitting at here? Counting right here. Right here. See the bottom of that green? Right?
Yeah.
You got a top wick right here. That same area. You got a top wick way back over here on this date. Sitting at 330. Right? That's your middle axis. That's your middle of your axis, your probability bell curve. True story.
Right.
Let me go and draw that over here. So that way so
and all that consolidation, you probably got to get through all of that too.
They got to fight through all them Black Lives Matter protesters, picket signs, and all that for them. right? They got to battle their way through that there, you know what I'm saying? Before they get to King Cooper, right? Or the big boss or whoever, right? Change the color on that one and brighten it up a little bit for the family possibly. Let's go. Or is you like a light blue? All right. So now that probability bell curve start to look more lucid now, right? So how do we do a probability bell curve? We do our plus minus ratio, right? I'm just gonna draw, a ragged one. It ain't gonna be, perfect, but I'm just gonna do an overlay on top of her chart, right? We'll play this thing out. We'll just say, what's the 26 is obviously is let's say about here. We'll say about right here, right? So we'll just start from there, right? So we'll go from here, right? Here in this pink line, that's probably the bell curve. Here's your positive. Here's your negative. Here's your neutrality, right? We'll denote that by putting the N. Neutrality is sitting in the middle, right? You have your negative integers, at least 2 negative integers, right? On the downside, at least 2 positive integers, on the upside, right? So you kind of hit that resistance point, which is that red line, right? So trading that neutrality, that's why the 330 calls are the most probable, higher probability strike price in this uptrend that you have to work with. If you was to trade this at a more higher success rate into next week expiration at 326, of course, in that of 337. But again, that's a lower price point. That's about a $200 differential between that neutrality point to the top half of breaking out, hitting that area, right, or clearing that resistance point, at least knocking up against it, at least whatever. But that's what a lot of traders are always kind of coagulating around. They might have been looking like that probably for past Friday. I'm curious. Let me just see that real quick on GP. All right, let's see what last week that 330 was pretty popular, and they probably was in trouble though because again, y'all know what SPY was doing. Woo, SPY was trying to there was Russian jokers up out of there. Yeah, the 325s and the 330s are obviously somewhat around there because within that window 325 because that's where it's still down at 320, right? And then the 330 they'll if anybody bought it for like a heyday, they try for it, right? But yeah, so this week, so 330 to 3 I would say to 340, that $10 window. Again, you see what's going on in terms of price action in the flow chart on the call side of that. That 330 being the most high probability of success, given this ATR, given this theta and this delta perspective. We ain't looked at them yet, but I'm pretty sure, and it's not going to be 100% accurate now because you're going to need that Monday price action to kind of open this thing up, in this case, to provide some real true validity. Because right now it's going to show you what this 31, which we know is not correct 100% because these haven't, you have to get into that previous week to kind of show the new tally. But as of now, it's set at 331 for people that tried to buy it last week. It's dead. It's dead man walking. All right. So in inverse correlation, that would be like a 70 plus delta going into Monday. And then when Monday open up, it can obviously stretch out up to north around by 80 or 80 something plus whatever once the market opens up. Depends on how it opens up. Red, be it bullish. If it's bearish, then of course you'll see that probably drift down around 70 something and stay around that point. Right. But as of now, of course, that's just a window of opportunity that you're looking at for as delta. Right? The IVA bad is low, right? It's thin. It's thinned out, right? OTA have traded bigger contracts in the past, but right now it's kind of thinned out a little bit because again, people still trying to mirror this to that of the XRT as well, and so it's a cyclical trade, right? First quarter is always going to be the most egregious quarter to get through for any cyclical stock because this is when they do a lot of their capex spending, the R&D, research and development spending actually happens during the first quarter of any fiscal calendar, right? Hint, hint, wink, wink. So look for earnings to always be a little bit weaker for the Q1 session. For most stocks, they always have a weaker Q1, right? And that's just not my word. That's based upon the data, how markets are, set up in terms of people starting to kind of field out, their books that they came out of the fourth quarter with, and they'll say, okay, now we're finna go into a little bit of kind of rebalancing, right? Spending a little money. Right? You'll hear that on their conference calls, right? Some areas might be still a little bullish, others we're gonna spend a little money so we can get ready for the back end of the year. especially with this go ahead.
So they're trying to lower expectation for the first quarter. So the second quarter, they come out with a better forecast.
A better forecast, right? Second quarter, third quarter, because again, summertime, people spending money. Fall time, kids going back to school. Q4, people shopping, right? So what makes this more interesting, because again, we're coming out back in the what's COVID scenario, right? So quote unquote, right? Them reopening the country, how well people going to take that, because it's weird. Because I was out there running errands today, and I stopped by the one of the little malls over there in Tyson Corner area. Up here, y'all know if y'all familiar with DC area, up around Virginia, Tyson Corner area, Falls Church, Tyson Corner. That's where them little bougie people be at up there in that little corner over there, Tyson Corner South. The mall over there behind Blue, man, that thing was packed. I ain't lying. I went in there to go to the Verizon store real quick to get another SIM for my phone. I saw the Louis Vuitton store line. It was outside the store, wrapped around inside the Bloomingdale's on the back end. People standing out there go get into Louis Vuitton store. That told me two things. I said they in there buying, they spending that stimmy check, and some of the guys in there got money, cause that little area they got a little money. But like, who in there buying purses, Louis Vuitton items,
Right.
at this juncture?
It might have been on sale.
Again, this is the full-fledged. This ain't no discount. This is the full-fledged Louis V store.
Louis store, you can pay full price.
Yeah, they pay. They right. So I'm like, okay, so these jokers spending taxes. Again, this is the pent-up trade. I got to go spend some money. It might be a mix of stimmies too. I saw them brothers come out there with shoe boxes. Y'all know them brothers. They had them shoe boxes in here. I said, boy, you tell you, joker, they even get some shoes, boy, on that stimmy check.
Must have been Chris.
The curriculum in that flip side of it, right? But yeah, they spending money. So again, it may show, may not show. But again, I pay attention to retail, because again, if I'm seeing that, and I saw people at the makeup stands in Bloomingdale, then guess what? Ulta stands to benefit what? Some of that money too. They got beauty care, cosmetic. Just what Ulta does, right?
Mm-hmm.
I'm just drawing that parallel, right? So, again, from a place of how the stock typically trades, the $12 ATR, the contracts obviously kind of mirroring that of, as of today's or Friday's close, how people are looking at this asset going into next week. They kind of see, again, a lot of people playing, at the money, that's, again, pretty decent weight. They're actually 320, 322, and 325. You see it here clearly, 40, 74, 61, bought Friday, right? They bought those Friday. Right, open interest is at 160 at the 320 at the money or in the money at this point. Rollover is still looking pretty solid. So you got a tranche there at that $10 window, 320 to 330, and then from 330 to 340. Right, that's on the outskirts there. That's at that top level of the base to what the linear curve, not the linear. Excuse me, the bell curve, probability curve. Right, as we noted. Right, that pink line right here is the top portion of that resistance. You see it right here. Right, 330 338, or basically 339. Right. Clearly there, and then 340 is the basis. What this green candle right here. So when you're trading options, it really can give you an understanding where people are sitting at. You can clearly see it, and then you go back it up by what, or you go back test it by what, the flow chart. So now you can put together what time with what, with money,
Price.
Yep, and price. It makes sense a little bit, Camille.
Absolutely.
Everybody that's listening is making sense a little bit. If it ain't, let me know. So we can delve into it. But this is how you're trying to map out what's strategic for you as an option trader in terms of what you want to solidify yourself in terms of a contract. If you're doing a directional premium buy, meaning if you're just going long or you're just going short, right? Before you add in a kind of strategy, this is just premium, outright premium buy, right? This is a bullish directional premium buy. Right, you're using that as a catalyst, right? A catalyst. So obviously the stock ended up what? Positive on the day, right? It wasn't a whole lot, but it ended up what? Positive. Well, SP 500 ended what? The market, or what? Red, right? Ultra squeezed out 0.82% to end out the day what? Green.
Green. Yep.
As you see, it's only 0.282%, but that's green. That means what? The bulls are now, feeling comfortable, even though they fought back the SP 500 that was what? Getting bludgeoned throughout the day. Ultra still ended the day green. It had a high at what? 324.61, almost in the 325 what? There it is, that 325 what? Resistance point to cross over to become what? Inside the penalty box. They went up there and tested it. It just couldn't hold because guess who was beating it down? The SPY.
Mhm.
Know what I'm saying? And you probably go look at the XRT, you're gonna probably see the same thing. Right? The XRT probably is fighting too. So again, a lot of good opportunity within that. Right. So again, me personally, I like this trade at that 325 point. That's more expensive though, but the 330 neutrality, I play neutrality all day, every day. Right. I play neutrality all day, every day, especially depending on how the market opens up Monday. It give or take. Of course, you give it a couple of days unless something crazy happened over the weekend and gut it, because again, we'll look at that in the SPY too. But we still may got some more downside in the SPY. Again, it's to be, whatever. But I'm just saying from this perspective, I will wait to see how that thing opens up Monday. Right, at least by my opinion. Again, I always use that 12 noon window a little bit, right? When all the kind of shakers and movers and kind of got out of the trade or whatever. Unless again there's some kind of outlier in there like a news or whatever, then I would kind of wait for that. Because you already know if it gets inside your box, right? Your gap fill box, you know this well as I know, Eva Camille. If it get inside that box, you know it's game on.
Yeah,
I don't care who you where you is, where you at, it's game on, right? Because if nothing else, you already know your downside, your base, right? Coming off your previous day. In this case, obviously the low on Friday was 317, right? It kind of hovered around 320. I'll play 320, basically stop loss and around that.
Yep.
If you want to, risk that much, of course, it's up to the person, and I'll rock out. Because again, that 330 obviously, won't be so much of a, that's only a $5 window. At that point, it won't be so hard to kind of capture, given that you have all the way up until the 26th to complete that contract. So you're talking about roughly around this area right here, right? We'll draw a straight line straight down here on this crosshair axis here. It'll be at that point, right? In this case, at the top of the resistance, the base of that candle there will say it'll be around that point right there. So that's roughly still saying around about $342, give or take. You see what I'm saying?
Mhm.
So, but yeah, so that's how you would kind of somewhat put that into a context on the option side, given time and given price, in terms of probability. Right. Again, we already know neutrality is sitting at where 330. Right. So that's your line. That's your gun line. That's your gun line there. Tell them about the gun line, boss. All right. You make it to the gun line. You cross over that gun line. We're gonna shoot you. We say you will get shot. Right? You will get shot there. So I like it for that perspective. Again, given how it opens up Monday and kind of trend. I say trend out around about 11 or 12. I'll have a more lucid picture, but I like that area. Me personally.
Okay, thank you.
All right. So again, a lot of good. Again, so when you go back and double back through this, whether you trade or not, of course, I would say paper traded. Cause how that stuff go. Newbie at that perspective. So you'll at least have some windows that you would want to look at.
Right.
Just how to see if you can kind of meet that trades. What it's called in the middle, halfway, meet it halfway, and it has to do the rest on its own at that point for all the uptrend that is starting to kind of round the bottom here, closing out, last week here, 5 days. I mean, look at it, just round the bottom. That's exactly what it is. Yep. Exactly what it would be. All right. So getting to that neutrality line would be great. All right. All right. So nice little breakdown there. So there you go again. So, I like this trade from that perspective, the 330. And then, of course, my downside, of course, y'all know I always play a contrarian trader too. Okay. My downside will always be what? Around that 310, or excuse me, 312, 313 area, right? Of course, 315 would be, ideal from that perspective, but you got a base here on the daily. From the day of Friday, was always at 317. That's the most, that's the most most short-term aspect to support. Outside of that, then of course, again, 315, that area at those 2 weeks there, this week here and this week over here, right? So I would play a downside around about 315, right? Around about 315 to 310. Well, I say 312, right? Between 315 and 312. And I'm pretty sure you're going to have a little weight in that area in terms of the put side. If you want to kind of backstop that thing. If the market obviously shows that it want to roll over, guess what? Yeah, those are areas you want to look at. So so you got at the money here, of course, and then there we go, that 317, there it is, and 315 right there. So you got to strengthen that right there. Then you got more people down here just saying, you know what, if he go dump, I'm gonna buy a lotto trade. I'm gonna got some lotto traders down here, 302, 305. Right, they're gonna chance it, Let's some strain for a little piece of chain. Right. But those look more stationary for that trade. So that's our bullish thesis, and also if there is a backstop to the bearish side, of course, it's very prevalent because we still ended the market. We closed down weak in terms of SP 500. So that sentiment, it's gonna be odd going into Monday.
Yeah.
So, so 310, there it is, 310, and then 315 here. So $3 for like $1 for the contract. All right, so I know I'm rambling a little bit. I get excited. All right. So that was helpful. Eva, Camille, a little bit. Was that a little
Thank
helpful for
you.
you? Okay.
Very.
I know we kind of
very.
went on a nice little diatribe, but it's good. We're in training. What we do, we try to look at different perspectives. So, so bull case, where you at for your strike price for your bull case strike price for the options? Are you more
For me,
favorable towards 330 or the 338? Where are you more favorable for your position?
330.
You like 330?
Yeah, 330, and then so that way it could run up.
So okay, we'll do 330 call by. All right.
Mm-hmm.
All right. All right. There we go. Cement it. It's engraved in history. It's recorded. We'll come back and visit this thing.
I'm gonna take a screenshot.
Yeah, it's recorded too. So I am recorded too. So and we over there live on YouTube. So just in case. So we'll kind of double back. So again, we got out some good windows there. We got the shipwrecks resistance at 338 course, and we got what we looked at on the chart before we even looked at that price. We already mapped it out, right?
Put the chart back. I was gonna screenshot it.
Okay, I'm sorry. No, go ahead. Yeah, go ahead.
Okay.
That camera live over there. I think. Go ahead, Mo. What did you? I heard it. No. So nice work, Eva. Nice work here. And of course, I got all my. I'll take some of my stuff off of it too. So I just remove all my drawing just in case. So that way you also got yours only. Hold up, did I clear everything?
Yeah, but it's cool because I got the trading view, and I'll map it back up.
Yeah. Oh, there we go. Okay. Okay, I see now. So let's clear my drawing. Excuse me. That's what I'm trying to hit. There we go. There. So there's yours. All yours. So yeah, well you can have more clean with you just in case. All right. So that's a beautiful chart. I like this. I like that. Your blocks. All right. So that's it. All right. So thumbs up, Eva Camille. Round of applause for you. Digital round of applause, like Dr. Boy can. Digital round of applause. All right. Nice breakdown, Eva. All right. So next up, anybody? There, over Brandon got to clap. He clapping. I see them hands up over Brandon. All right. All right. So anybody else? What you got? Anybody got an asset that you might be looking at getting ready for next week that we got ID breakdown train on?
Yeah, over right quick. I did have a question in regards of doing her technical analysis.
Mhm.
I know it's different when it comes to ETFs because you got a slew of assets in that ETF. The actual price, does that vary, or would you treat it as like a regular equity stocks?
It
I
depends.
would just trade the price action.
Trade the price action.
Yeah.
Yeah, and they say when
Yeah,
it
'cause
comes to
only-
options. Oh, go ahead. I'm sorry.
Well, I mean, if I was, trading ETF, I would just trade the price action. The information is in the candles, so I would just map it out the same way. I mean, if it moves faster, that's great too. But I would still use the same process of analysis.
Which is right. But I also want to add this because again, when you trade options, if it has the options, then again, keep in mind it does still gonna have that fundamental story too, right? So
Right.
if it's weighted in an ETF that's in this case, like I said, we're doing XRT, right? So real quick, we ran to the XRT just on GP, right? In terms of this asset now, we just only talking about what's name. See right here, look how it lined up with your order block already. If I just left it as is, you see that there? You see how it lined up? Gonna make this stuff up. Look at the top box, blocked off. Look right here, blocked off. All right, look at that line, that wick right there. Got it. This area right here, obviously you kind of see a little area where it kind of channeled in this area here. This block right here before it broke out. See how it broke out from here, got inside the box, it resisted out, and then it broke out. Went high. You see how that worked?
Yes.
I didn't do nothing special. I just clicked on the XRT. You see exactly what's going on here.
Right.
You already resisted out around 94 up here on the XRT. Right now we can go see how much OTA, if OTA even play into this ETF, because that's an important question over Brandon, right? Because it's a weighted average, based on this what all the other stores playing into it, right? They good news and they bad news, right?
Right.
Yeah, I like the price action on ETFs.
Yeah, like I said, and again, they do have a story, but then again, it's componentry, right? Or it's compartmentalization of who get the better, bigger piece of the chicken, right? The allocation, right? In that ETF. And so clearly you hit resistance all day, every day up here in the what? This little $95 area or $95 area in the XRT, right? Retail was banging a little bit coming out of what? Q4, right? Because of what? Holiday season shopping. Look at this. I'm not making this up, right? Look where it launched from. It launched way back here. Well, even when it banged out, obviously, in the beginning of January, it came out, filled a lot of those gaps, whatever, even on this week here, definitely, but down here, right, to the little wick here, then it definitely came back and got it on this one here, right, to take this guy here out, and now you built a new what, more solid support, right, at around this what, this area right here, right, this little yellow, this little $79 area here, and we haven't looked back, right, you just marched out from basically 79 or 80 bucks all the way to what, $94 in how many days? This is the daily. So you got what, 1, 2, 3, 4, 5, 6, 7 days. This thing stretched out 20 points. That's big for the ATR. I'm just giving the XRT. This is the ETF. It moved 20 points. I guarantee the XRT ATR gonna be around about what? If y'all had to guess how much y'all think the XRT ATR is on a daily basis.
What about 15 points?
You think so? XRT? Look at the price. Price at it. This chart is gonna tell you that. Cause look at that. Look at them tight candles. Do you know that ain't 15 bucks? This is the daily chart now. Keep in mind. So this is daily. Yeah.
Look about.
I cheated already.
Like about 24 points
on the daily. Y'all say the ATR about 24 points on XRT. Y'all some generous juggers. Y'all get big. I throw that big piece of chicken. Everybody gets a piece of chicken. Here's a chicken. You get a piece of chicken. You get a chicken. Everybody get a piece of chicken.
Now, keep in mind.
What about 5 points?
It's 343.
See, and it goes right into the question you were just asking over Brandon. Now you see what I'm saying?
Yeah.
Within that window, because it's fighting all the other stocks inside that ETF. They're good news and they're bad news, and in relation to that or the what S&P 500, right?
Right.
So all those things come into play. So that's why it become more of it's that balance between fundamentals and technical. Unless it's just really in a all out technical blitz. In this case, you're coming off of resistance, right? You trying to establish you play. If it's coming off resistance, chances are this stock is playing right now? Defense or offense? Think about it. If you're coming off a resistance point, what are you doing within this first 5-6 days if you haven't really established a level of support? Now you're playing defense or offense? Think about on a resistance. If you're coming off resistance, you playing
defense.
Play defense because you try to keep those gains.
You trying to establish a
support.
Damn. How do you play support? How to do it? How to do it, bro? Oh, they took a little lower. How to do it? Dang, they took a little lower. How to do it? Them by the dippers, right? Right. You buy a dip and a dip a little low. You're like, God, dog, I know I should have said that. I know I should have said that. I know I should have said that bacon. I should have said that bacon. Right? I should have said that bacon, right? Because they got me, right? But in this case, that's why we're very strategic, because clearly you see here on the linear regression band, whether we had up here or not, you top that around 394. Excuse me, 95 in XRT. You can't now hit your mean line at around about what 89, right? 5-point differential, right? As you see here, it took how many days, right? Well, 1, 2, 3, 3 days to kind of come down those little 5 points, right? On the 4th day, he rested, right? Throwing that parable in there, right? It's trying to what? It's trying to show some kind of what rounded support here, right? They fighting here, right? Now we can obviously go take it to the bar chart. We'll see exactly how that those contracts look at around that point, right? In relation to that of the next particular what gap that it could probably what come down to and test for support, which is around about what 88, right? 88.50, and then right at the mean line, in terms of the bottom wick at this candle and this candle is sitting at what around about 87 or $88 even. You got 88.50 and then $88 even. They ain't going back as far as this candle right here, right? Outside of that, you got a what 20 moving average sitting at what 87.23. So this shows you that this stock typically trades on a daily basis, kind of real tight, around about $3 or $4. What's the ATR of this stock again? Somebody called it out.
343.
There it is right there.
$3.43.
Couldn't make this stuff up. It's all diagrammed by the support resistance points, or in this case, support on the downside, because you playing defense, you trying to step what? Preserve the gains you got off the last massive breakout, right? Clearly here, that's it. It's playing from place of defense till it starts to what? Present or make is what? It's rounded bottom, right? Y'all know this thing we love the rounded bottoms. As of now, that rounded bottom is sitting just like that. Now, it don't mean it can't break and go lower, but as of now, they fighting. They fighting to hold this little, this pretty much this 80. What is that? I tell you what, what is it? $88, $88, $88. Yeah, $88. Right. So let's see the price action at $88. Put in calls. And that's basically, a little bit, out of the money or in the money turns on where it's at, because obviously it ended up at $90, right?
I was looking at the wrong chart the whole time, man.
But yeah, what year?
I was on the spot. I was like, why I say 24 points like that?
See how they do it? See how they do it? Look at that. See,
Oh,
like I said,
man.
Look make it up. Look at that $88 put. See right there?
Yeah.
Look at that money right there. Bam.
290. Yeah.
Look at them open interest. 1,200.
28.
Gonna make this stuff up. And this is what that was the end of this week. We'll look at next week. But I had to show it because this is what people were trading at last week, right? Look at the that would have been in the money. If you bought the 88 call, look at that. See right there? Come make it up. See right there? 356. 826. Look at that. 5 in between it. 7 on the what? Underneath it. And 5 on top of it. Why everybody sitting at that 88 then? And obviously the 90 because that's what? At the money. See how that works?
It's the money spot.
See how the market, see how the option flow charts just really give you a whole different perspective in the picture. Now there's price action and value because you see the money sitting there. It's coagulated money. Make sense a little bit here, Camille? All right.
Yeah.
Definitely over Brandon. You seeing this a little bit here over?
Yeah.
Right. So that's how this stuff kind of play itself out. So if you're gonna do like a brother Rich B, obviously he do a lot of what? Strangles, right? You play a lot of strangles lately at brother Rich, if I'm not mistaken. Right?
I want to try that.
All right, but you will see how that will look like at the $88 call and the $88 what? Put. Now, if you're doing just strictly at the money, because we know that's that $90 area, right? Not rocket science, you're gonna see the weight there. Look at that weight on that $9 call strike price. Right? And in terms of the weight, I should say the volume is 943. Look at 7,000 open interest. Right?
That's tough right there.
Yeah, you had a contract between $2.53 and $1.44. The high's at 5. That's it's gonna look odd like that because it's the end of the week. But you can see people kind of setting up shop in around that point because they playing for that what? That rounded bottom potentially, right? They trying to the defense is still what? It's in play, but they trying to see if they can get this thing to round out around that mean line around what? $90, right? 88 would be ideal, right? Because we got a 20 moving average bouncing off around about what? 87, what was that thing? 87.20, yeah, 87.23, right? Which is basically what? That's your gap right there. That's your gap field, right? If you playing it all the way back, even though you kind of went up here and came back and overtook it, but there's your your immediate one. If you want to even play that game as a game of support, around about $86, $70, $87, whatever, give or take. But that's the way to that this asset at that point. And again, clearly XRT still in the uptrend, right? Now, again, depending how the spot trade though, it can lose that, that little middle line there and this little aggressive trend band here. And hello, my dollar in the 87, right? Even down here towards this $85 area, it easily come down there. Depends on how this market kind of shake out next week. Because we still up against some real big major headwinds, right? That bond market ain't yielding. It is not yielding. That USD dollar ain't slipping, right? So that's what makes this market a little bit more, you got to be more cautious, I should say, right? It makes sense a little bit, guys.
Yes.
Yep.
In terms, if you use again, this asset course, we just putting ideas together. Not necessarily mean you have to trade it or not, but again, if you use a look at that, you'll know why, right? That how those things obviously match up in terms of the chart. Because what do you see? You see obviously what a lot of money sitting at those pivot points. That's why we say pivot points. Where's your peak to trough? Where's everybody hiding out at, right? Well, you go to flow chart, you can find them jokers, right? You can find them on that flow chart. Right, because those are trades that are locked in. See, you can't spoof an option trade, cannot, right? That money is allocated. It had to be in before what time? 3:59:59, right?
Mhm.
See what I'm saying? That means that money is there. It's locked and loaded. If you missed the buzz, you missed the buzz. So market maker can't spoof it. Hedge fund can't spoof it like they do like equity trade, right? Have all these kind of odd spreads at the end of the in the after hour session. You have these old odd spreads. You be like 30-40 cent spread. Ain't nothing in there, and they're trying to catch the people to kind of mess them up. Won't happen in the option flow chart. Right, so that's why I love using that as a really good window, right? So, but yeah, there it is. You got $3.43 ATR. So again, that makes sense. Yeah, $3-4 in the perspective, and it has grown over time because of the fact that the the XRT has broken out. Yeah, I mean, that move right here was just like gangbusters. And that's big, that's huge. All right. And it kind of fall within the window about that. So again, you're talking about $80 to 95 on the 5 days. That's about $3, yeah. $3 a day. So give or take, give or take. Right. So not bad. A very accurate readout to a degree in terms of ATR, possibly give or take with XRT. And it's starting to kind of present itself as it's trying to build around the bottom before it really go into offense. Now it goes into offense when it does what? Close above or inside is what? This box here, right? Now it's playing from a place of offense. If it closes anywhere above or inside this box here, this little area right here, that if it closes above here, anywhere there, yeah, it's offense now. On the short term until there's something changes, it's playing strictly offense. Then those areas like that look good. That area there look good, and then the top of this box look good, up near $95, somewhere around there. So that's really awesome. All right, so guess it. So anybody else? I know we going there. I don't want to stay too late. I know, we get to going and we be long-winded. Anybody got to stop? What you got? Anybody got to say again?
I was gonna say, is there anybody in the YouTube chat? Because I have another one.
Oh, I don't see anybody on YouTube side got to stop. I don't see anything in the chat. A lot of families coming through in and out because I know everybody busy on this Saturday. No, whatever you got, man, let's run it again. This is you guys' you guys' moment. Y'all tell me what you want. We're gonna work.
PAVE. PAVE.
It's one over the PAVE. All right, and this is hold up. Hang on. All right, so infrastructure. Okay, of course, this is our infrastructure play, right? Infrastructure play all day, if I'm not mistaken, right? Is that what this is?
Yeah.
All right. This thing almost lined up with that same box that Camille put out. Dang, Camille, all your boxes just whooping right now. Them boxes still eating, almost. Look at that top channel right here. See that thing? It looked almost like the XRT. It ain't hit the top peak up here resistance, but it's kind of what rounded over, right? We talk about these. We're talking about these rounded tops, right? Rounded top, clearly. Right, rounded top, clearly. Resistance sitting up around about what, 25, give or take. Let's see here. The discounted got as high as what, 24.94. Yep. So we'll play it. We'll count it. 25. 25 resistance it is. Right. So and now you back down here. This candle here load out or hit a low of 23.95 on a daily Friday. Of course, that's your wick right here. At a point at this one here. Came back, kind of hit these guys here. You got a 20 moving average sitting at 23.84. So what about the stock you like over, Brandon? Where you at on this? You directionally, you want to throw some lines on here and work it out?
Yeah, sure.
All right, let's clear it out. Clearing you out, Sister Camille here. Those lines. Right. The floor is yours, over.
So the reason why I'm looking at this stock is because obviously Biden was giving he gave his proposal, I think it was, in far as infrastructures, and then I read a lot about him. I want to say donating, but it's not donating because it's our money anyway. Giving like a $35 billion. This is what one of the things he put in his bills. Gave a $35 billion to the United States, whatever, as far as infrastructure. Let's see. And the reason why I chose this was I was just trying to beat the move. And when I say beat the move, is I'm just trying to plan ahead because I know this stock has potential to pop. And I read an article that this stock in particular has an up chance of going up 35%. But I'm not here to try to capture the whole 35%. I just want half of that. So I cut that in half, only want 17.4% of this move. And I was going to do a long-term option play on this thing. So, I mean, right now, only thing I can really chart out is this point. Well,
Okay, I moved. I'm sorry. Let me know if I need to blow it back up. I'll squint it down, kind of see the bigger move, but you need me to blow it back up?
no, that's good.
You sure? You guys, okay, right. Mm-hmm. And go ahead, draw your lines really quick. I actually, I gotta shut the door in my office real quick. Keep talking. I'm gonna be right back, you guys. Give me a hot second. I gotta go run and cut.
So my entry, I was thinking about getting roughly around here if it goes down a little bit closer to the linear regression line, just to capture this move. One of this play for me is just baffling because I keep thinking about, okay, so many posts are talking about 35% moves. One of the posts was Market Watchers. Another one was Barrington. CNBC Business was talking about this going up a potential, 75%. And obviously, we don't buy the news. We sell it. Eva Camille, do you like this?
All right, guys, sorry about that. Got
No
here
problem.
over. Getting the lines on there. Where you at? Okay, you got a big.
Yeah, hold on, let me-
That's you, the purple, right? Oh, okay, I see it.
You know, with these lines were like points of entry to get back in if it decided to go back down and touch the bottom of the linear regression. Because right now this stock, you know, it's been on up tear, you know, and
Right.
I want to see.
So you have basic 17, going back as far as November 2020, November 2020.
Nope.
All right, so that's kind of like around the, out near the beginning of the, fourth quarter time, when that tally kind of kick in, in or around the area 20 or December, basically, but still closing out Q3 in that time frame. But we really got on the tear in around that time because we was going into what was the big event in the month of November? Clearly, I guess it's cheating when I say that, but what was the month of November? It was the where?
Elections.
Right, and you had policies, right? Candidates that had certain relative policies, right? We already kind of knew initiatives that surrounded around infrastructure was very favorable towards who, Trump or Biden.
Biden.
Clearly, in that moment, this was an asset that obviously that would have piqued a lot of people's interest that understood that if Biden had a chance to win, this is where you want to be, because those are going to be the talking points. Obviously, you're going to hear those things over and over. Him obviously getting into a piece of legislation at some point on the table, which we're in that status now. But this was the front load, right? This was the the front load trade, right? Like, oh, he won. Let me go buy all things that had to deal with what? Infrastructure that has strength value. The same way how we did some of the energy plays, right? Plug, F-Cell, right? Even at that time, Tesla, all those when they was banging before they, began to get beat up lately, but it was a given, right? Steel, that's another one, right? Steel that's a big proponent of what? Infrastructure building. Lumber, make sense? Would y'all agree with that? That some of those, ancillary items that go along with building what? Infrastructure up, because you need raw materials, right?
Right.
Yes.
Y'all agree with that? I almost guarantee steel, right? What's US Steel ticker symbol? US Steel is X, right?
Yeah.
Yes, X, yep. We want to bet money's probably still in the uptrend, or it might have been in a nice strong uptrend too, right along that infrastructure time frame. Anybody want to bet that before I click on it? Anybody want to contrarian trade there? Let's see. There it is. There it is. Election time, $9 and change. It went up and hit a high of $24. See how this stuff work? How dare y'all miss
Actually,
this
used to
trade?
be a lot higher than this, though.
Take it over, Chris.
I said US Steel used to actually be a bit higher than this. I know a year or two ago.
Yeah, this, like I say, post-COVID, of course, it's coming back, But here's what's interesting, because again, like we put these things on a bigger time frame. Really, you can see what the U-shaped bottom. Now, maybe COVID was again to give them the curve because it brought money back into it, right? Because y'all know, let's be honest, we don't make it political, but we gonna talk that talk. Trump about make America great again. Remember, he was a big proponent for steel companies. Remember, he was supposed to make the steel companies great again. If nothing else, steel was supposed to be one. That was a Trump trade. I don't know if y'all remember that.
Yeah.
U.S. Steel. What was the other steel? Is STLD. Those were Trump stocks. True story. Because of what? The border. Building the border. Right? We're gonna need steel. American steel. We don't want no Canadian steel. We want China steel. We want American steel. Trump stock. And guess what it did? Doing Trump, what it do? I ain't talking about Trump, but y'all, I'm just saying, if you're a Trump fan, don't be in your feelings right now. It had that pre-run of the ideal of making America great again, but guess what happened? Harris did what to steel companies? Crushed them.
Yep.
Them tariffs. 44 all the way down. This before even COVID even was even a thought. From 44 all the way back down to $8.
Mhm.
And I
Yeah.
showed it several times, during that time. I was showing it several times in there. That's come I know.
Yeah. Yeah, it was tough, boy.
The tariffs were tough on steel.
Yeah.
Right? Aluminum was getting beat up. Companies like Alcoa was getting crushed. I used to trade Alcoa a lot. AA, right? In the earth to crush Alcoa. Right? Aluminum, bauxite, aluminum as a whole, right? All the little ancillary metals like that, crushing them. Copper was still trying to find this footing, right? In between that, copper didn't break out until obviously after the COVID lows too, right? That one stock that we was looking at, that even Sister Andrew brought up, the SEOO, right? That thing been on a tear ever since though, right?
Mm.
Copper had been wavering, right? It same thing. It peaked out around about 49 back around that same time, 2018, and it went through its way. It ebb and flow. It had a little better look than steel, but it bottomed out again around 23, and it been lights out ever since in copper. All right, it's been lights out ever since. Right, that's that line we drew way back when we was looking this a while back. I said if it's gonna come down, it's gonna action itself off this little trend line off that round the bottom. It bottomed out, right? And then it kind of V back up, gapped up, and it's just standing trend. Now it's outside the band, but we'll see how long that holds. Because right now, metals are a little bit kind of, they struggling a little bit because you see what steel doing, right? They're trying to, rebalance themselves because they were kind of overbought. But definitely U.S. Steel, of course, getting back to your within your thesis here over Brandon, this is going to be universal for that because these are going to be some of the ancillary items that's going to make up that paved ETF, right? That infrastructure. Again, lumber, right? What's lumber? Was it XLB? Materials, excuse me. Right? Look at materials. Same thing. Buy and trade, right? November, where we at? November, we were sitting at about, right here. Yep, right here. So 68, 70-ish, 68, 69. And then what? Been banging out, obviously it's some more, tightly woven trade. It's still up here around about 78 now, about 10 points since then. Not bad. Right? It's not a big ETF that move a whole lot, but it's still in the uptrend. Infrastructure, right? There's others too, of course, your Home Depots, all those type like that. But yeah, so getting back to your asset, Oprah Breton. So sorry about that. And I kind of went on.
Sorry. No, the reason why I brought this one up too, because when you type it in FinViz, it comes up as a financial sector. And you spoke on, I think you spoke on this a couple minutes ago, or probably like an hour or two ago, about the financial sector being beat up. And then I think they spoke on it Thursday too, is going to be beat up as well. So I'm over here conflicted, like, is it really gonna get beat up? Is it worth putting my money into? Or like, just all these things, start to look at the ATR 50%.
Yeah, and that's like I say, this is the one that's had a low beta, right? Even though the beta ain't showing here, but it's gonna be a low beta. If you got an ATR 53 cent, that's a low beta stock. Right. That means it ain't as volatile. It trades within the defined trend once it's solidified, right? Based upon the projects, the things that are more apparent to that particular ETF, having a use case, right? So this is a more constructive trade. This is kind of like how we're looking at copper at that time for Sister Angie, but clearly here, as you said, it's more 30, like you said, 34% over the next year. Infrastructure obviously kind of kicking, and this is the conversation we started to have that now because guess what? We just came out of all the other initiative. He's moving into that the aspect of his next particular stimulus. Is it going to be infrastructure and immigration?
Right.
So, yeah, it may go through some short-term pain because of the bond market and all that, but your trend really is not that farther off from again. Okay, well let's play this little. Let's play a little 53 cent deal. Like that's how we're looking at it here. Like, okay, you can clearly see it here. It's trading in around there, right? Around the top. You closed at what? 24.50, right? 24.25, right? 50 cents from that's what? 23 what? 80, right?
Mm-hmm.
Y'all agree with that? Somewhere around the 23.80, 23.70 something? Well, look at the 20-day moving average sitting there. It's sitting at what? 23 what? 84. Right? That's your supposedly short-term pseudo support. All right. outside of the daily lows, because you still got to always work from the daily lows first and then work backwards. Your daily low sits at what? 23.95. Okay, 10 cents off the what? The 20-day moving average. Low beta stock, right? So that's, your step down support points, right? Or I call them step down support point, but that's basically what you're dealing with. All right, you got Derek, you got this guy. After that, you got what? A little gap right here, right? So if we cross line or cross axis that sits at around about 23, what? 86. There it is. That's that 50 cent. That'll work from 23.84 down to 23.30. What? 30. Hold on. What was that? Wrong. Yeah, 23.40, something around there. That 36 to 40, right? That's your next little window, close around about 4 to 50 cent, close to it. And then on its way back down towards the bottom of that linear regression band, which sits at about 23.18. Right? Even if you do it out for as you have a contract that expire on the 26th of March, if time and price obviously marry this, in a ideal setting, it will be down near 23.25, right?
Would you give it like a little bit of time on it for Biden to solidify that actual bill?
Of course.
Okay.
Right. So that's what I think, because we're moving into it. The talking points are just now started to unfold in the press, right?
Right.
Pasaki, what her name is? Pasaki, I mean, messing the name, but Jen Pasaki, whatever her name is, you got one of them weird names. You're also, the press secretary, right? Y'all know Tamai, right? The redhead chick, right? No, but by the time her talking points really begin to mirror that, right? When they get through all the other stuff they're dealing with, right? This border crisis stuff, but those conversations are going to become more relevant, right? Because now the stimulus check conversation obviously will get old, then we'll start moving towards the next one. Now, again, given the fact that this asset is definitely going to be correlated to the S&P 500 a lot, because there are some of those, again, those aspects in the materials, obviously steel, whatever, lumber, all that stuff, infrastructure, right? Those things that cost. The financial side of that, right? There's a monetary side to that too, right? So of course, even if you mirror that to the XLF a little bit, or some of those stocks, within it, right? Because we can go look at the holding, right? So matter of fact, okay, paid ETF, right? Look at the holdings, right? Let's see who's sitting in it, who weighted in it, I should say, right? Right. So the weighted is weighted at go ahead. Somebody was saying.
Go ahead.
Okay. No, but see right here, there it is. So it actually, the top tier of them don't even have what's name in there. Look at there. Some top tiers, what? John Deere. But I would close John Deere, one of them, but yeah, definitely excavation, right? So Caterpillar probably, but it ain't in here. But I guess for pay, they already kind of got their holdings that they like. Parker Hannifin, right? Norfolk Southern Railroad obviously makes sense, right? Rail system, transportation, moving items through Eaton Court, train. Y'all know about train technology, them trains, what they call them, little lifters and whatever. Some of y'all probably worked in them area, right? I think they make forklifts too. I could be wrong, right? But Emerson Electric, right? Look at that. Semper Energy, Vulcan Materials. They're the materials again. There we go. Union Pacific, the other railroad. United Rentals, right? It's on the lower end, but it's in there, right? It's in there. But yeah, but John Deere being the top tier, that being the top holding, 68 milli value in that right there. So, and knowing that, we know that John Deere carry a lot of weight. So if John Deere slipping, then it's gonna adversely affect pays, right? So now we look at this in terms of, let's say, John Deere, right? John Deere actually had a pretty decent earnings recently too. I think it was rocked out. Well, there it is. There it is. Y'all see it. But it rocked out. You see it clearly here. John Deere been on a tear, because John Deere is definitely a infrastructure play. This is you buying it without having to, if you want to buy the ETF, all you have to do is just buy John Deere going into into the election. It bounced literally off 220 and haven't looked back since. John Deere been killing it. And I've been watching it because I always watch these little, all these ones like they old school, right? Them, Caterpillar. Some of these things are just household, right? If you've been in the game long enough, when it comes to certain infrastructure and things like that, like materials or you know, those kind of hard, like Dow, because this is a Dow component, right? You talking about John Deere, Dow Jones. This is definitely a Dow component, right? The big 30, right? Deere been on a tear, right? It's been on a tear. It's just not starting to roll over a little bit. Look right here. Tap the top of the resistance band here, 363.39, rolled over. Beautiful. Came down, bottom out around about 330. So what? Okay. 30, no, 27 point pullback. Here, you what? You parabolic blew off top. You had a blow off top. Literally, oh, John Deere, blow off top, combination there. It thing went up as high 392. 392. Blow off top. And now you just starting to what? Roll over. Because you're what? Highly overbought. Look at the RSI down here. Look at the squeeze momentum here. This thing been green like forever. Way back on December 22nd. This thing ain't took a day off yet from being green. No red, nowhere in that. Right? 200 moving average sitting there at 257. The volume still strong. Look at the volume. Even though sell volume is strong, but it's still strong. Right? So it has to crest out at some point. Right? And when the volume start obviously dropping, that's when it should start to what? The stock should start doing what at that point? Rounding out. But right now it's playing what? Defense, right? They're playing defense. Right. So yeah, it can come down to easy what, you know, and test this area here, right? This little 361, right? Obviously you see the support points. I mean, just, you know, that being kind of at the, you know, as I say, the middle area to a degree, somewhat, right? Want to move out to that 250, 356, excuse me. So yeah, you got check down here, 369. You know, yeah, area there. Then you got some obviously little guy right here sitting at 364, so around about $5, so 365, whatever, 365, excuse me. Give or take in around that area there. And then the base of that's around about 364. So in and around that area, it's gonna be tight up in that whole area here. So midline to the linear regression band, if these contracts expire, let's say on the 26th, well, the midline still puts it around about 364. You know, 365 in and out the week if it can hold trend, you know, pull back, even dip down a little lower. It can dip as low as 360, right? You know, at the mean line, and then trend back up towards that 365 and close it in the week, and it still be in an uptrend, right? Strong wise. But as of now, it's definitely trending, you know, it's trending down, right? Of course, obviously, just had a blow off top. So I would say the 360 or the 370 puts, all right, 370 puts, 368s, obviously, of course, you know, 365s, of course. Yeah. And then lowest like 360, 361s, probably two, 362s, I should say, somewhere between 361, 362. They're probably gonna be favorable, right? If they feel like, you know, if they're gonna let the air, a little bit of air at the top before they kind of round the bottom out, that's what you're gonna get in that. So let's check that. And I know I'm off script a little bit over branded, but we're making that base hit because you're looking at the ETL. So you're just asking that question about what? Weight value. Make sense?
Yeah.
So you want to look at those things, right? So that's where people might be hiding out here, right? Just in case. Now let's see. So on the put side, into hold on, this is past Friday, but let's go ahead and see next week, right? Well, this week it ended out what? Strong on the probably what? Okay, let's see what's going on. Call side. Dang, they were still buying this thing. They're trying to move. They're playing defense. Ooh, they're trying to play some defense, right? They got beat up though, but they tried, right? Because that blow up top was just superlative. So they were trying, but whatever. So going into next week, put call ratio is going to be very there it is. If I had to guess, I could almost imagine the put ratio is going to be heavier than the call side. Why? Because we already established the what? The trend. Y'all agree with that? That downtrend? Or anybody want to test that? Anybody want to test that?
No test.
No, I seen it.
Anybody want some smoke? Anybody want that smoke? Anybody want that smoke?
Oh, that's
What'd you say, Ebro? I'm sorry.
I said, no, that's a short.
Oh, dang, I messed up the screen. Sorry about that. Yeah, but again, we had to blow off top on the daily.
My goodness, some other stop talk.
Yeah, you know what I'm saying? Starting to pull back here. So But those are going to be the areas of interest as far as the put buy. So again, the relation of the call flow, the put flow is going to be superlative to that what? You know, the lack thereof of strength.
Saying it's
Call
going
buyers.
down. That's fine. Next week, maybe.
Who's that?
Maybe.
Somebody on. Who's that? I'm sorry. Somebody on. Who's that? Oh, is that brother Big Boom? Who's that? Big Boom and Sister Angie came in. So
Yeah.
who's that? Oh, what's going on? Yeah, getting it in a little bit. Peacebound Profit over. I'm just hitting button and clicking button. So my bad. I was in the middle of that. Peacebound Profit over. What's going on, Book Angie? What's going on, brother Big Boom?
Much love. Much love.
In the house, right? Family coming through, right? Getting in, right? I love it. Right. So just looking at this, we're going over some, some trades, obviously just mapping out some technicals, technical and fundamental perspectives on how they will obviously play out, individual trades that these guys are obviously putting out there. We just kind of analyze them. But these are really good choices y'all been grabbing out so far. I like it. All right. Again, this pave one here in relation to John Deere, because what you do, you find other trades off of them. This John Deere trade obviously definitely setting up for something different. When I say different, meaning, the idea that, here it was sitting up here clearly at the resistance point, and you just now starting to get your rollover, right? It's fresh meat. This is fresh meat, right? That don't necessarily mean they can't what, try to turn it, but looking at peak squeeze momentum here, you still sit up in there peak squeeze momentum. You sitting at peak aspect of the sell-off. Look at the two volume bars down here. They're at peak sell-off still. You had the blow off top on this guy day here. This guy just started to kind of show itself as, okay, we're getting ready to make that trip downtown. And so that's why those puts at or around, of course, 370s to 378s gonna look, 368s inside that window gonna look a little bit more they're gonna start looking a little juicy. Right. So here it is right here. There it is. So the 370s, 215. Gonna make this stuff up. 117 on the open interest. The 370s, 376.50 because there's no 378. That's that $0.50, niche area. That's why I was kind of thinned out there, right? The next whole dollar mark, obviously 365. Obviously half a whole dollar marks. We train on that. There it is. Right? Playing it back down towards that area, right? Again, strength of it definitely sitting at that 370. Right? So yeah, they're playing for the little pullback in it. So that relation or that correlation over Brandon is going to be reflective of those that pave trade, right? It's still on a trend. It's still on a tear. So if you thinking, if you, like you said, you're looking for more time out, well, guess what? You can probably get this call by a lot cheaper when it kind of potentially come down a little bit more, right? Even if we just try to play this 2380 area, as far as, as low as 2330, whatever, given 26 is the last day of this contract, if I'm not mistaken. All right, we'll go double back and check that. Let's go see if this, what it is. Sorry about that. I got a quick little message. Make sure. Okay, yeah, no. All right. So that area there will be more of interest, of course. Let me see. Where is that? The 23. The 23. Hold up. Oh, so these expire April. Oh, this must gonna be a little bit more time out. So yeah. So at the money, or actually in the money, ain't no volume at that 23 as of now. This is doing like I said, I thought it was. They're gonna wait till this next week come in before they start thinking about those. They're gonna let this thing come down a little bit. That's why it's thinned out. There ain't no volume there at the 22, deep in the money areas at those places. You got people sitting at the 24 and the 25. They're just playing at the money because it's cheap. Not really, a whole lot for $60 for a month out. I mean, that's about based on entire month out, 60 cents for that contract. Excuse me. Open interest sitting really nice at the 25 area, which makes sense, right? It makes sense at the 25 area because you got, obviously resistance there, right? Clearly that's resistance there, right? So you're talking about April 16th. They're saying as far as here. Where you at? Where you at? 16. Where you at? 16. Bam. So you're saying April 16th, you have a top resistance at 20. What is that? 26. Okay, let me pull this down. 26. 2676. Right, and a support. I mean, again, worst case bottom support gonna be around about that 24. Yeah, $24. Right, that's your window. Right, that's your window. About $2 and a little change for that contract for April 16th. So this ain't the type of contract you want to buy. Out of the money, too far out of the money, even in a month's time, because it probably has, again, low beta. You're dealing with a low beta, right? As we see, I think it was already on the pave. Yeah, the beta's only what? Excuse me, the ATR is only what, 53 cents. So, but it's also a low beta too. So yeah, but it is still in its uptrend, given the fact that, of course, it hadn't really broke outside of the trend, just trading at peak to trough perspectives, right? So yeah, you get forcing to get this thing down, near 23, 20, 23, 30, right? Worst case scenario, if it come down to 23.86, yeah, I'd be I'd buy that for $1, right? Right, a few dollars, right? But I would definitely be looking for this like a 3-month window, 2 to 3, 2-month window would be my minimum for me personally, right? But I'd be looking for like a quarter perspective, like 3 months out. Because it's going to take about that long for that infrastructure to be able to get through the system.
Right.
That's even if they even because I'm pretty sure they're going to do a reconciliation on this one, right? They don't want to waste that. You only get what, one or two a year, or 2 or 3 a year. That you get 3 a year, right? 3 a year. So maybe, but I don't know, right? Depends what they try to roll into it, because they're trying to do immigration and infrastructure, right? Depends on how the border crisis still get, if they really want to test Republicans and make this a reconciliation bill. So let's give it 3 months. So 3 months out will be what? June, right?
Right.
Y'all agree with that? There it is, right there. Clearly, I guess I can say there it is, right? Let's see what the put call ratio look like at that point. There it is. Look at that. Drum roll. There it is. Y'all see that put the call ratio? Can y'all see my screen?
Yes.
Yeah.
How many puts you got that were bought for June Friday?
0.
How many calls were bought?
0.
No, yeah, 0 to put. But how many calls were bought Friday?
9 to 1.
9 to 1 of them. What's the open interest on the call side?
3,534.
How many put open interest out there?
0.
Yeah.
Nada.
Bruh. Now you see some stuff reflective over here in this, but apparently, from Friday, I guess it's reading that from Friday, unless there's a glitch, right? It might just be what they have for Friday, but then this will obviously be different come next week. Who knows? But it is definitely what call heavy, for just like we were just talking about. And look where your weight is at. Your weight is at what, that 24? That's that middle, right? You got 22, right? 22, 23. That 23 was talking about. That 23 area is very, in my opinion, of course, it's very, actually, that probably sitting on the bell curve, if I ain't mistaken. If we was to do it just from, I don't know, we'll just do a little quick one on GP. Let's see. Sorry about that, guys. 1 second. June 4th. Dang, that's a long way out too. Man, all right. Let's do it though. Let's do it. Let's get it. So that's 16. There's our resistance. So this ain't gonna be the most pretty one. Don't y'all comfort me. Don't comfort me. So we're within that window right there. Right? Hold up. No, I didn't go far longer though. Lower enough. What am I doing? Sorry. 25 here. Lower the bottom of the band there. And you back around here. There you go. All right. Your middle gonna be that thing out of the middle. That's your neutrality zone. So that's your end. neutrality. Here's your net positive. Here's your negative, obviously. This is our bell curve, 25. Of course, it ain't the straightest line, but y'all know, y'all get it. Right? Here's your negative integers, 2 up, or 2 down, 2 up, and there's your top, right? There's your resistance. Here's your support. Here's your time axis, right? Time axis, right? X-axis to your Y-axis, right? Price and time, right? Well, in this case, of course, you know exactly what's going on here because your lines are very pretty, obvious here. That's your, a base level there of support, right? Old resistance, right? There became new support. Obviously, when it flipped from this perspective here, it flipped, and that became new what? New support. Obviously, clearly what? Right here, right? Resistance. Now what? Support, clearly. So that's the base of our what? Linear regression band. Gonna make this stuff up, right? Or excuse me, this bell curve, this bell curve. So 2250, right? And anything beyond that, it's just like, okay, yeah, it had to be something crazy to happen. Like they about to just shoot this deal down before you even get started. I don't see that happening though. So yeah, so you playing that middle between 2350, 2375, whatever, give or take. That's the area of interest though. That's the area of interest. So that's why that area gonna have, pretty good, decent ratio of buyers that we buying in around that area between that and 24, I should say. $23.50 to $24 gonna be the most strength area at this point. And this is early, of course, but that's what it's looking like going into what, 3 months out, right? Not bad, even for the price too. But like I said, I will wait because I'm pretty sure you'll be able to get this even a little cheaper. Maybe by next week, next week, maybe the next week or two, but at least by this week, you'll start getting a little picture of how this is going to shape out, right? Because guess what's going to make this asset barbecue a meal do? John Deere. Deere going to be the one because it's the most weighted one in the holding. Does it make sense a little bit over, Chris? Over Brandon, excuse me.
Yeah.
So when John Deere, come and bottom out, if he's going to do his thing, right? When it start getting this round the bottom, that's when you want to start looking at what? Hey, it's the biggest holding. Right? That's your symbiote, that's your marriage in terms of this ETF. So hypothetically, if we can get John Deere around 360, man, that would be great, right? 361, 360, that would be great. That's about another 12 points down, right? John Deere ATR probably sitting at around about $6 or $7, somewhere around there, maybe give or take. The way it's been trading, it should probably more, but it's probably about actually wrong 9. Dang, near 10. Woo.
Nice.
Yeah. That's nice. Yeah, that's because it's been on a tear. Look at those numbers. Everything green over here. even again, it ended up what 8.81% on the week when everything else was getting obliterated. It's still up. The month 24%. On the quarter, it's up 42%. On the half, the biannual, it's up 69. Makes it 70%. On the year, 211%. John Deere been crushing it. Obviously, I've been watching it too, but it's been crushing it. Look at the chart. Charts don't lie. They say the numbers don't lie. There it is. Yeah, 355. They got 355. What that's on the? Okay, yeah, on the 20 moving average on that one. But no, so yeah, 360 area. I'll be watching that. 360 is, clearly here, right? Because you got a top here, and you got a resistance point there. Then you got a launching pad from that, higher, right? So I will look forward to kind of, if it's going to pull back any more, that would be my first area I'll look at. After that, then of course it's 355, and then potentially 350. But even at that point, PAVE is still at worst case scenario, it'll be at around that 2280, 2250 area, right? And I think right at that point would be the most optimum time to let that money go down range, in this asset in terms of well, that's my opinion, right? On a leap, elite call by for this contract, right? Because again, it just seems superlative at that point that it will make more sense there. Hold up, is that the area we had drawn? Hold up, no, we had to blow it around. What was? Hey, I messed it up.
25.
What was it?
The resistance was 25.
resistance 25, and we had support sitting at around what? Was it 2350? Or no, was it 22? We had it. And I messed it up. All right, dog. Hold up. Hold up.
Oh yeah. You had it.
Was that where it was, or was I wrong? No, that wasn't it, because we had them support resistance points up there.
Right.
God, dog, I messed the thing up, man.
Oh, you had it.
Trying to see where because no, I'm in the wrong. Well, it was John Deere. No, that wasn't Deere. That was paid. Yeah, what am I
Yeah, that was
tripping?
paid.
It was paid. Oh, it gotta be. Oh, I might have stretched it out. That's probably why. So it gotta be somewhere around there. Give or take. Somewhere around here. Yeah, because that would have been that's resistance support would have been somewhere around there. Give or take. Because again, here's the support clearly here, basically what I'm saying, 2250. Right. So it's off a little bit, but y'all get it, right? You're like, man, yeah, you just messed up the chart, bro. No, but there it is. So yeah, so that's where I would want to look at that. Of course, neutrality, obviously, that's, you know, if it can hold that, fine. If not, the basis would be more attractive around the low 23s, like I was saying. That would be more attractive buy for, you know, elite in that case, and turns out towards June. That would be the most optimistic, because the most optimum play, because again, Deere is going to pull this down. And clearly, John Deere going to be on thing to pull this thing down, right? You know, and of course that's a Dow stock, so that's how the Dow's trade. SP 500 has some weight, but really it's the Dow at this point. That makes sense a little bit over Brandon. Put a little paint on that.
Oh yeah, 100%.
So what was you looking at though? I know I just didn't ran my mouth, but what was you looking at for as your elite play? What did you have in mind? Year out, 6 months out, 3/4 of the year out, 2 years out? Where was you at for us the ideal?
So I was thinking about September. I think it was like the 17th.
All right.
You want to get that information on paper.
System.
Yeah.
Let's go look at that. Let's go see what it's looking like. But call ratio, still weighted, right? Still overweight, right? Call ratio there. Clearly, y'all can see that there. All right, clearly you can see it there. And it's still sitting at around what? That's that area. There it is. 23. Even down 22. But that in 25 resistance is still in play. So that's your window there, right? That 22, in this case, like we said, 2250, we're saying 22, whatever it is, so 2250 here to 25. Right? That's your window there. That's why you got this, a lot of strength in that window there, that box, that kill box. That's the basis of the kill box right there. Right? As we talked about last time, that's your kill box right there. Right? You gotta, you plan this area here, right? You hoping all that obviously, work yourself into this into play, man. Of course, this is at peak point of profitability going to be if this thing can get down near low 23s, right? Fortunately, you'll get around in the high 22s, but unless something crazy happened, that would be the most optimum time to trade it. Into that of September, like you said, by the time that infrastructure or that the news of this bill come out, the infrastructure aspect of this, that the bill itself will be more a viable source of completion, or wherever it will be. We'll know what's up, like you said, right, by that time frame. No, I mean, no hesitation in that. I'm pretty sure the Greeks gonna be all over the place, but we'll see. Right? But yeah, not bad. And Delta still ain't bad. All right, 70, 69 cents on the dollar. As of today, of course, Friday for the 22s, and for the 25s, 49. So basically 50 cents on the dollar. That's not bad, for that much time out. Of course, it obviously changes as the volatility increases, right? Into that, towards, especially because this thing is on somewhat of a downtrend, and the car buyers really began to even, start kind of trickling in a little bit more. Of course, that's going to increase that delta, right? Your Vega sitting at 7, about 7. at that 25 strike. Not bad, right? It's volatile around about 7-8 cents. You know what I'm saying? On a daily basis. That's basically what you're getting in terms of your volatility with that Vega readout, right? So not bad. On a more lengthier time frame, not bad. But yeah, so that's how I would look at that. So you want to add anything to that, Over? I'm sorry. I know I get talking a little bit, but
No, I was just gonna say like, and this was gonna be a play that I was gonna hold just for 17% because I want half of what they're projecting to do for this particular stock. So they said it was gonna be like 35 or 34. I want to get 17% out of it. So you add. I did the math. What 17% out of 23 is $3.91. $3.91 is something I'm looking to capture.
that's
for the
around what?
trade.
Was that 20? Was that 28? 20? No, that's no 20, 26, 27.
Yeah, 27 some change.
27 some change somewhere around there. Yeah, give or take. Yeah, there you go. Obviously, you see it clearly here too. At that juncture, in turn, 60 calls came in for actually Friday. 440 open interest sitting at the area too. All right, so very probable in terms of, let's say if we take this to trial, as far as way out there on the linear regression band. Let me clear this out the way. Sorry, guys. All right, to that time frame, that puts us just using this as the case study time wise. Let me bring this down. Sorry. September. Okay, it's around about mid September, somewhere around there, give or take. That puts you at the top of around about 32. Bullish case, right? 32. Base case around about 29. About 29, somewhere around there. Right. And that's still $2 under that. Your goal of 17%, around about 27, right? That's still a $2 premium on top of that. Of course, if this thing can just rock out, because again, you're not gonna get too much pushback in terms of the infrastructure. Of course, Republicans they hit or miss when it comes to infrastructure. They tried with Trump, but a lot of that money went elsewhere. But it's the idea that they want to borrow more money, and they already kind of saying we gave you 1 trillion now, so they're gonna push back. But of course, everybody knows the country needs infrastructure. It does. Period. It's just gonna be a thing of how well they can really fight to solidify them actually cutting the check at what level, right, of bipartisanship, or if they again this reconciliation thing. I don't they got 2 more they can use for the year with. So whether they burn it on this one or they wait to the next scenario to burn, that's gonna be up for debate. But I do like his chances, to continue its uptrend based upon the fact that I don't see John Deere really bottoming out, because again, we are going back to quote unquote to the open, opening up the economy scenario. So John Deere still stands to gain in that. There's no reason why John Deere wouldn't still, this is the way it went. So yeah, I like it over at that point there. Again, I'm a buyer. Anywhere down low 23s would be great, right? Would be great. High 22 definitely would be great. But yeah, that time frame, I like it for that price axis too. So not bad. Those contracts are still sitting at only $1.30. Yeah, get it. Let's get it. And that's as of today, of course. You probably can even get it down near 100. 80, 90 bucks for that contract, possibly if they dagger this thing really quick and get it over with, right?
Right.
John Deere, if they going to bring that puppy down about 360, whatever, 355 support, yeah, you might get the puppy around about $1 or 90 cents, right? And so, like you said, you're just playing for 70 cents, and that's not necessarily if you buy an option course. You could just be buying the equity, but you get my point,
right?
That's where I would be looking at that puppy at. Nice little trade there. Nice little find there over in that regard. So like it. I like it. Again, but definitely above the 20 moving average here. Been trading around above it actually for a good little time. The only time it came from underneath it was obviously doing this perspective here. Once they paid out a divvy over here on the 30th. 30th of December. 6 cents dividend. Not bad. Whatever. So there it is. So all right. Anything else within that over Brandon? Are you solid where it's at, or you got anything to add to it or whatever?
Oh, I mean, you basically mapped out my my option trade for me. Thank you.
You training, man. You know how this stuff go. You gonna work. You gonna work. Let's see. Let's go. I got to go ahead and check.
Right.
Let's see what. I forgot. They changed it up over here. Now you got to actually click on it. You can't just type it anymore. All right. So, okay, just the basic overview. It's giving us some again. Just it's overall looking at the trend here. Look, where's the? Oh, I forgot. Maybe because because it is the global ETF. They don't have that kind of stationary analyst readout data points on it. Beyond that, what you just get from those who are covering it in terms of tip rates, apparently. Enviz obviously got news on it constant though, so that's all you need. So you good.
I was gonna say just look up John Deere when you.
Yeah, definitely Deere. You're right. Yep. Like you said, definitely we talking about that. So terms of inflation may be good for U.S. economy once we get that. Interest rates, whatever materials. Steel, aluminum actually been on a tear, so that's good. Copper been on a tear, that's good, right? Again, transports, they'll pick up. Of course, we get back to work, mechanized oil, whatever. But you need the intermodal, diesel and rail, right? Rail is going to be important because again, stuff get to moving again, so that'll help in that perspective too. So, all right, so yeah, again, on that perspective, I like it. And so again, the same way you'll be trading for the, lengthy uptrend, we already kind of mapped out potential what the down, right? So if you want to, again, do you what? You strangle, right? Right. On that perspective, right? You'll know exactly how to trade that. If you want to Herman push it down there, right? Like Herman get down there, so I can buy you loan. Then clearly you'll know, the put structure that you'll be looking to trade. So even next week, or not next week, excuse me, next month, all right, that $24 area, yeah, that's what that's at the money, or where's that now? Yeah, so it's kind of still at around the money. So it's going to be 20, or it makes it 25. You buying 25 in the money. Those puts still, yeah. See, there it is, open interest. 1,000. No, that's the calls. Goodness, man, it's late. 24 at the money, or in this case, like I say, at around it. It's only 3 of them out there. But yeah, 75 cents for that contract for that one for a month out. So not a lot of love there. The 23s at 5.76 open interest. Yeah, give or take. Like nobody want to short this stock, man. You might have, hey, I don't know, Over. You might be one of them like, man, look, we don't want to fight. Right? We just want to go sideways and eat up theta. But no, it has to, again, if Deere pull back, it's gonna pull back too. Even if it's a 50-cent ATR, it got to come back and test us 20. Best case, 22, high 22s, but we'll see. It's not even worth talking about because it is a bullish trade from that perspective.
Yeah, and I know it's not volatile like the rest of them, but it's just one of those long-term plays.
Yeah,
I just want a guarantee, or somewhat guarantee on my money.
Yeah, this is a glorified savings account play. We talked about these kind of trades a lot. Basically, what you're dealing with here, glorified savings account. In this case, of course, you got strength, you got a forward fundamental catalyst. In this case, the infrastructure bill. Them just playing into it, right? You got a high weighted multiple aspect in here in terms of John Deere. Of course, that's going to be the direction. That's going to be the driver. That's the driver. Right? Who driving the car? John Deere. Right? Everybody's playing their part. Union Pacific, all those, United Rentals, all those, they just playing their part. Right? But John Deere definitely driving. Okay, grab the wheel, John Deere. Grab the wheel. They got it. All right. So definitely mirror trade just by being able to watch John Deere. That'll be your indicator for this one here. All right, so that's it. So awesome. All right. Anybody else? Anybody else? Real quick. Anybody else? What you got? What you got? Anybody got any stock to want to look at real quick on? See if I got anything.
Somebody ain't got one. I got one more AMC.
AMC. Okay. No, you talking about Sister Kiana Trey. All right. The AMC. All right. Where you at? Over? Run it. What we'll do? This is on the daily, guys. Y'all know we're on the daily. And this one that we didn't gut it already. We still gutting it, but where you at on this AMC trade? Over?
Man, it's just a mess for me right now because I'm still thinking about just all the potential. Like, hold on, let me just draw it out.
Yeah, definitely keep my annotate. Go ahead and you guys have definitely the annotation. So I see there. All right, so right here. Saying back towards that level of gap up there.
Right.
I'm gonna blow it up too. Over. I'm sorry. I'm gonna blow it up too, just in case. I might be watching it from. Matter of fact, y'all want to fit all of it in there? Yeah, let's fit all of it in there. Let's get all of it in there. Actually, there you go. So yeah, you can probably reposition your line so that way we at least see this guy up here. Yeah, where we took it at. We took it on up there to the promised land. Me and Kiana, I think a few other people might have hit it too. We took that thing to the upper room, boy. Upper room with cheese. What? Upper room.
So I mean, this level over here is potential of where it can go back to. Will it fill this gap? I don't think so because I think AMC is trying to use the leverage that they got from GameStop to solidify themselves as a business again. Well, I think I read an article that they're trying to get all the U.S. AMCs open by next week. So, I mean, I think this is a big driver for this particular stock as well, trying to get all this back open again.
And I will say this, I'm gonna add to that. It's starting to diverge.
Rise and wedge.
Right.
And I'm saying because, well, and you got to ride the way too, but I'm saying it started to diverge from GameStop. GameStop is still rebellious. AMC is trending with the SPY, bro. I don't know if you've been watching, because I've been watching. Look right here. Your SPY comparator chart, or excuse me, a line is down here in the blue line there, right? Look at AMC.
Yeah.
Does that look like the SPY?
Just like the spot.
And look, just like the SPY. Y'all agree with that? Anybody want that smoke? It's in the panel right now. Anybody want that smoke? Anybody say different? Anybody? Anybody want some smoke on that?
Yeah, pull the chart up.
For the S&P 500?
Yeah.
There it is right here. See the blue line out here over?
That's
See
just
right
the line. Pull the chart up.
Oh, that's it. That's the chart. That's literally, yeah, that's the chart on the line. Same way you look at a line or HLC or candles, that's literally still it. You way you look at it, still it. Right, there's your pivot. Right, there's your ride at the bottom.
Look the same.
There's your ride at the bottom. Look at the R. Even this RSI still a little bit more peaked out than the SPM, but it's still about the same there. There's your round the bottom on the RSI. Right, there's your what? Up near the what? Top side of that, of course, over about there it is right here on the SP 500. Of course, right there. Now, I'm saying that because you did bring up GameStop, but I've been watching that. I've been watching them lately. I've been watching the correlation. I've been watching the converge and the diverge. It's starting to diverge from what? GameStop. Because y'all know soon everybody got their stimulus check them first round, where they ran to.
GameStop.
And guess what? Remember I said? These people gonna lose their money. They finna go to these stocks, they're finna go rocket, and they finna get that little $1,400 wiped out. True story. I wrote a song about like to hear it. Here it go. I can show you back. I tell you. Right? Do that look like the same as SP 500? To that of what we looked at far as least AMC? You had the initial lift. But this thing, what? It didn't pull back a lot harder. This thing had ran over 360. So I'm excuse me, over 350. Now you can get back $150 worth. Of course, it's a high flyer because it has a high, a higher beta. It's more volatile, but it's starting to, it AMC is in relation. Matter of fact, okay, let me just do this. Let me stop talking. Right, AMC. Right, let's do the comparative chart in terms of AMC. Right. What I got in there? Oh, hold up, dang it. Well, let me take this WT out. How did I got in there? All right. Let's do it in there. There we go. So that way I'm gonna show y'all I'm talking about. Y'all ain't finna make me out to be on live. I've done this research already. That line right there, that blue line right there, that's AMC. Does that look like it's converted with GameStop? Anybody? Look like it's diverged for me. If you ask me, GameStop trending down. AMC still trending what? Up. This so that way we clear it. This blue line right here is AMC. All right, let me change the color. Right, let me weight the line up. I'm gonna fatten the line up. We're gonna make it a bright color. Well, not hot. Well, do hot pink. Yeah, something like that. Y'all see that there? AMC right here. GameStop down here. That means AMC is now starting to what? Trend out is what? It's by conversions. It's getting back in alignment with what? Equities, as it's supposed to be. Because their fundamental story is more intact than that of what? GameStop. Where I know what happened, they paid down their debt, right? What was that? Silver Point? Silver Point was the biggest creditor or debtor that they had on books after they did that last tranche, earnings raise that they tapped. It got completely paid off. $750 some odd million. It got paid out when GameStop, AMC ran with like what, $20 a share. They did what? An equity raise. Smart by them. They paid pretty much all they did down. In that one blog top of AMC. That thing basically went from $2 to $20. So they got their debt, under control, and now they're starting to open back up these theaters. So yeah, AMC has a more, in my opinion, of course, a better use case at this point. Then that obviously clearly talking about GameStop, right? That whole Wall Street bet scenario, they got a little weight, but people at this AMC like, man, we good now, bro. You know what I'm saying? We can open these theaters back up. They're gonna freak at us more than they run up in GameStop, right? I'm just saying. No, but go ahead, Overbrand. Lay out the thesis again. I know I get to talking about my bad, I get to rambling, but
I mean, that was pretty much it. I mean, it's just the fact of what next week they're trying to open up all the AMC stores or the theaters, and there's roughly around 5,000, 10,000 theaters they're trying to open up in one go, and people are getting these COVID shots left and right. You know how people is, they want to get out and go. They want to be stuck in the house. I guarantee you next weekend AMC is going to show, a good or a positive, percentage as far as like their revenues for next week.
Instead of traders started happy because they was taking profit. Right? A lot of guys bought them dips, right? They bought that dip, went to 20, came back down and hit 5 and ran all the way back up to where's that near 14? I mean, that's over what? That's about 125%, somewhere around there, give or take. 125% since when? The 19th of February? About a month. Literally about a month. Right? So you up 125% near about a month ago. See right here, the insider trading here, happened on the 18th. Right? 90-day selling trend extended at AMC Entertainment. Insider trends, right? Insider the 90-day selling trend extended. But at the end of the day, of course, that's just people trying to rebalance that, ate good off those little bounces, but it doesn't affect the trend, like you said, because they got what? They have a fundamental case playing out in terms of reopening, right? That means it's going to be cash on the books. That's going to be cash liquid. That's cash receivables, right? That's organic growth, right? That's real organic growth when they come back into the books for a change. Right? No more relying on the senior debt note, borrowed money at this point. They're going to start, turning them cash reserves on. They obviously been opening some of the other areas already, of course. I think they opened up in Illinois first, if I'm not mistaken.
Yeah.
I think we read into that maybe a month ago or so. They was already starting to open up, but no, like you said, the gauntlet of them opened up a lot of other places. Yeah, obviously going to be. And so you said by next week, right?
Yeah, they said next week Friday.
Right. So
yeah, and they also got that Godzilla, King Kong, or whatever it is, Godzilla movie coming out.
Right. So y'all are.
Oh yeah, that's gonna be tight. I gotta watch that.
I'm already with you. Me and you watch that together. Cause I'll be front and center. Right. Cause that's right up my alley. That's my old school. I come off that. That's my time frame. They're old school Godzilla. So y'all remember that's the old school Godzilla days. That CGC look so ratchet, boy. I just little ratchet, boy. Like who they little puppets? I come out that school.
You can see the string.
Everything, boy. And his mouth used to look like a little. I was like, man, boy, look at that. You don't know about that old school. That old school.
I used to love Godzilla.
Straight old school, boy. Joker on them, Mothra and Mothra. What the whole bunch what my man named God, what's the other one thing? Rodan. Rodan. Y'all know about Rodan, but I'm stop, man.
I was watching it the other night, not the black and white one, but the more modern one.
Yeah. That doggone Rodan, boy, I used to get that joke. And then the three-headed one,
get it, yes.
What's the three-headed one name? God dang, that's always to be
Mothra.
No, Mothra was the moth. Rodan was the bird, right? And then the three-headed one was I know it, but that was one of his biggest nemesis. Besides
Megatron, Mega something.
Yeah, something crazy. Yeah, y'all know what about the three-headed one? That's the alien one. That's the one that's not from Earth, right? But that was his biggest nemesis, right? But yeah, Mothra and Rodan, they always see battle them. Yeah, man. So no,
classics.
Classics. I mean, super classic. Right? That's an NFT. I didn't put an NFT on the old Godzilla movies. Right? But no, clearly you see it here. Look at it. So you
that's Ghidorah.
Who was it? The three-headed one?
Yeah, Ghidorah.
It's some crazy name. I know it's some crazy. It's slipping, man. You're right, Eva. Yeah, I'm gonna look it up after I'm done. Yeah.
Ghidorah.
All right, classics, man. Great classics. Right. So, but you're right. If you're gonna play the end of the week trade, now you know how I would do this from here. If it's Friday, that puts you at the end of the expiration, right? That means it's still got to fight through the downtrend overall market, right? Because since it's been trading converged to SP 500, I would not be buying next week's weeklies unless I'm buying what? Deep in the money. And I will wait to at around, really, literally, around the 11, 12. That's just my opinion, quote this training, right? This one here, I'll be looking at, going into May, at least minimum. Why? Because if that's starting to happen next week, Friday, they're going to try to trade in around it possibly. But, I want to see if they're really about their life, right? If they really want to hold, right? Prepping into that, reopening position, not just, the theater, but just America as a whole, of course, this whole reopen thing back up. You want to get this thing time to unfold because, again, it is still dealing with a lot of shorts that are still having thin them jokers out, right? So, of course, you could trade this any kind of way. I mean, even further out, but you ain't really losing. If you look about a month or two out in AMC at that point, because you think about it from this perspective, it has a better fundamental case than obviously GameStop. I know we keep saying GameStop, but no, it is really more. It's more positioned for, again, that May June, whatever, when this whole idea with the Biden, you know, every person have a vaccine by what, end of May, right? Theaters are starting trying to go full throttle by, you know, end of next week. Okay, by the time they go through that experiment, we'll know if it was effective or not by what, end of May, June. You see what I'm saying? So me personally, of course, you know, that's just being still, you know, I don't know, you know, a little liberal, but conservative, meaning April, but on a more, you know, conservative perspective, I'll be more out in towards June, right? Um, and you know, within that time frame, of course, we can see the put to call ratio even that far. Now it's starting to look like it's kind of balanced out in terms of people buying it for today, but you know, clearly the call open interest is still extended beyond that of the put ratio, right? But that's where I would be trying to park, you know, in around, again, the window where we at, like you said, that gap right there, what 1124. So if they're gonna do any kind of pulling back, you know, based upon what may happen with the SPY because of bonds, right, early in the week, lead up into this news event, well, they better make it happen. That trend is still pretty strong. It is in the rising wedge. It's still as close to this what top of the integration band sitting up here around about 1490ish, right? So even if you just say by the 26th, even though these contracts don't expire, they have to expire in April, right? So it really don't matter, you know, as far as end of the week. But it is an end of the week trade based on that catalyst. That still puts the stock topping out around about 1528, right? And you said it right, brother Rich. It is in that what? It is in the what? Wedge pattern. It's definitely in a wedge pattern, right? If we just use the lattice, week alone, we'll just say for now it's here, right? So it can trend up into this little area here, probably move. It can happen before that, and what trend out of it, right? That's how this stuff is. It's all projections. We don't know, but if we just took it out, to that time frame a little bit, right? I should have said the 26, I guess. It'll be somewhere around there, of course, but it could trend in around there and just go ahead, or it could just pull back again, come back and fill this gap, or come close to it enough. And then definitely it'll be all lot, done and brick to buy this thing at that point, because you right at your 20 moving average, you're based at $10.62. I don't know if it's gonna come that low, right? But strange things can happen. But I'll be a net buyer for those long-term dated ones anywhere in this window, in this wedge, at the lower end of that there, at the lower end. So roughly around about $12, I'll play the difference. I'll play that neutrality point around $12, right? If I had to kind of weight it back towards this little basically this little support candle here. Dang, that's an ugly drawing there. Forgive me, guys. I'm just murdering this chart. This white one here, that candle there, and then you already got your resistance calculated. No secret there, right? So I would want to be somewhere around this point right here, $12.50 to $12. I would want to look at it somewhere around there particularly. So even if it doesn't break, $12.50, of course, and come to 12, again, I'm comfortable with that. $12.50. That's where I'd be looking at. I would, really get excited. If we can get it down there 10, all right, 10.50, 10.70. Oh yeah, don't worry about it. Back the truck up. No, so what you like about the Ober Brandon? Again, I know y'all know I am. It's late. I'm rambling. It's been a long day. Where you at in as far as your entry price?
So I would probably wait.
You had one already in play. You already had one in play, or you just looking at it as far as particular?
No, I was just looking at it. I would probably wait till it hit at least. And this is just me, probably around like 9 or what is that, 8.75?
That'd be ideal.
Right.
Woo!
Right there. Yep. Wait, right there.
I'm with you. Mm-hmm. All right. Like I said, that's why I said just on a, and in terms of I say back truck up, and I'm just playing it strictly to the 20 moving average, right? Because it's still in the uptrend, and it's still in the a U-shaped bottom, a U-shaped pattern off the high, right? Let me clear this ugly drawing off here for a moment, right? Yeah, coming off the highs, right? The blow on top. It's still in the uptrend, see what I'm saying? So if if they want to play this game of saying, you know what, we think AFC got weight because it's getting ready to open back up, that means they finna have some organic growth on the books, like some real organic numbers, right? With all the other theaters gonna open up. So yeah, that little window there, back down towards this little area here, that block right there become what? That thing wake up there. That block right there wakes up. Yeah. So let them play that game. Let them. I throw a couple dollars at it right there, right around that 1060, 1070, all day, every day. Even $10 goes at the axis there, or the crossing point, or the medium line of the linear regression band, and the 20 moving average at where it cross right here. So yeah, 10 to 1020, 1060, yeah, yeah. So because I haven't been back in AMC in terms of option trade since I hit it back on that one that me and Kiana hit. I got some shares of it. Of course, down in the $3, $4 area, well, $4 area in this area at this time. I add a little bit to it in one portfolio. But far option trading wise, I don't. Right. So, but I would want to get back into it, like I say, in that, because I know it's getting up here near this top of this band, right? And then the bonds kicking behind, the SPY tripping, right? So build that handle. Yeah, build that. Hey, best part of waking up is what? Gold is in your cup. Build it. Build it. Build it. There's the handle. There's the base of that handle. Build it. In terms of build it, and I will definitely come. There it is. I will buy the brakes off this area right here. If they dip me there, then of course I'll set my stop loss. At around in around this area here. But they ain't that expensive. I'll just wait to get back in down if it came down that low. But something tells me that they're gonna be fighting for this 1060 support if it get down that low. You're gonna see some joker back in the truck up. And RSI still sitting up at 67, so yeah, it can afford to dip down here to around 50. Best case you may get this at 40 RSI. Best case, that's best case. Best case. Again, that puts it down here near this, in between 1062, actually between 12 and 1062, somewhere around there. So yeah, so that's how I'm looking at it. So anybody want to add to that? Anybody want to take away from that? Anybody want to share some more particular interests for this particular AMC trade? Technical and or fundamental?
Mm-mm.
I know it's messy. I got my drawer in there look like one of the little kids that got on some sugar. He got hold of some sugar. Writing on everything. That's how I see it from that, that angle there. Support, in terms of support, I think it looks pretty good down there though. So this guy here and definitely this line here, the opposite, optimum here. I think that's the bull case here though. At 20, and then at the top of the candle here. All right. So let me see here. Contracts. We looked at some of those. Man, look at that. They stacked in there too, right at that $10 area. Look at them jokers there. That's a month. That's June. That's June. That's open interest now. That's not what bought. That's open interest. They just been building into that. That mean them contracts ain't closed out yet. They just been building them up, piling them up. Yeah. So.
Yeah.
Go ahead, over.
15 too. No, I was just saying, yeah, and at 15 too.
Yeah, definitely. Yep. Yeah. Again, definitely. So again, I'm pretty sure. I'm pretty sure. Yeah, and them deltas that probably might be pretty lucid too, or pretty decent, I should say. Excuse me. Not too mad, that far out. It's liquid. Yeah, definitely liquid. So it's sitting at as of today 63 cents. Of course, that's not the true readout because you need intraday volatility to kind of really show where that's at. So it'll obviously change come Monday. How the stock open up, either down or up, whatever. But that's still not that far out the money. It's not a whole lot out the money because you're talking about what $1.07, whatever. But you still get 63 cents on the dollar. Not bad, not bad still. You got to keep on it. I mean, if it's moving still to the upside on the positive perspective, I mean, you still, doing pretty well in relation to that of this, and it's super volatile. That's the crap. I mean, look at the volatility that far out. It's still high at 170. Ugh. Even though $10 one still in there 170 almost. It's just a volatile stock. But it can pay out really nicely once you have a directional bias. If nothing else kind of really gets in the way of it, of course, coming back to test some level support around this 1030, 1060, whatever, $10 even will be ideal again. Then they can just really benefit from it, ride this just going out. So, like I said, I'm sorry. Dang it. My bad. Sorry about that open pitch. Yeah, but that's where I like it at. So yeah, that's how I would trade that. I'll be looking at for anywhere from June and further out. Right. I mean, if you want to play again, the reopening trade, like Open Brand was talking about, I wouldn't do next week's. You could, but I wouldn't. I would do more like April, right? April Fool's Day, right? Right. Let's see if COVID, is about that life or not. They gonna April Fool joke out. You got COVID, man. I caught that virus. Yeah, you got that real virus. Ain't April Fool nothing. When then that movie theater and got you some chicken wings and beer in it, and then a COVID gift pack. Now you be them people gonna protect themselves, of course. I hope so. They're gonna move there, but yeah. So 14. You say it's evil.
I said they can't wait to run outside.
Oh man. I said that mall was packed today. I was so scared being in there.
I know.
I had jackets on because I'm like, man, I don't even think. I had like
I be having
double mask on. I had double mask on. I was looking all crazy. I was like, every time, because people in there, they just, wow. People, the young folk, they just spaced out.
Yeah,
I'm dodging joker. Like I'm talking about, give me 50 feet tight. Like give me 50 feet, bro. Give me 50 feet. So they just be walking and they're like, no, how you not still? We still in the coat, man. Don't be trying to walk near people. And then people are what? What they call it? I forgot what it's called. When people just involuntarily just kind of, it's like they kind of just move towards you. Right. If you see, then they kind of shift towards you. I forgot what they call it, but that's how like people moving like they just moving towards like, no, this ain't no straight line. No, we're trying to dodge each other. Right. At least 4 feet. I'm just inside cutting through the little makeup areas. I'm angling all through there, and them jokers like walking like this. Now I'm like, no, I'm straight. Dodging them jokers. I'm straight. I don't want none of that virus stuff. Yeah, so that's where again that AFC, yeah. So yeah, also so IMAX and Cinemark. Don't forget, right? Hold up, IMAX. All right, IMAX. That's your other opening trade. All right. Same scenario. All right, obviously end up positive Monday. Excuse me, Friday. Same scenario. Keep an eye on IMAX, guys. I mean, that's pretty much a comparative chart to that of what AMC, AMC, right? So IMAX theaters, same way. What month? That was just closing out this past Friday. So going into the next month, 16th of their contract expiring. So yeah, see, opening back up, going to movie theaters. So you can go look up news on IMAX and see, what are their timelines for opening back up. But stock sitting at 21. So let's say we start at the money. In terms of keeping on the call side and work our way into what, outside the money. So you got some weights in up here at 23. There it is right there. The contract was 60 cents a contract. Not bad. $60 gives you about a whole month, close to a whole month, to play into that strike price. And then you got some soldiers sitting up here at 26. They on in the outskirts at 15 cents a contract. So there's your window. I mean, there's clearly the window there. Deep in the money. What's around what? Not deep in the money, but just in the money at $20, 21, 20 bucks here, and then towards this 23. So ATR on IMAX should be around about maybe $1 and change, give or take. Let's see. Yeah, $1.22. So yeah, makes sense. Beta ain't too bad. 1.86 beta. It's down 9% on the week, up 6% on the month, 22 on the quarter. Yeah, I like that. Let it come down some more, right? Right. That means it's already, basically in terms of the overall month before it pulled back, because it was up around about what, 15, 17% on the month, before it pulled back. So yeah, that means that's man, y'all know anything around about what, 20% drawdown? That's what most people back the truck up, right? And start buying. So before I even seen it, I was just thinking like, yep, it's probably gonna be down near the bottom of the band if that's the case, because
Doji.
they finna get ready to try to turn this joke. Right? And I mean, look how it's respecting the bottom of that band to make this stuff up. Obviously, got clearly overbought up here at 25, and it's all the way back down to 21, and it's already bouncing off the bottom. And they got earnings coming up here on the 22nd, right? Basically 4 days after this contract expires. So they're gonna definitely try to buy this into earnings like they always do. Most people do, right? Especially if it's a compelling case. They got a reopening trade. Movie theaters opening back up. It's already at base support. Man, it'd been nice to snag a little bit around about 2060 area, whatever. But you're still not too far. That's around about 70 cents. Not bad, right? So again, if the market just open up week next week and try to play back down towards this band here, as long as they don't really come out, I'm a buyer here. I don't, in terms of a call contract, because it's already at what, near peak point of profitability. It's at the bottom of the trend of the band. That don't mean they can't come out of it, right? But it's it's already at that at that base thing there. You have some volume where it thinned out when it came, even on the squeeze momentum here, it's tapering out. So okay, if you pull back a little bit, come back down near that if you get a chance to do that. Base support around about 2075, whatever, 2066, 2075, whatever. I still like the uptrend better than just buying puts down here, just trying to squeeze last little bit of limit, juice out this lemon. So yeah. So IMAX, man, there it is. And so let me see. Probability trades. Mid-April. That still puts them around about 26 at peak point. Give or take somewhere around the peak point around 26. That's best case scenario. Midpoint around about 24. And then you got a base case around about 2022. Right. Which makes sense, because look here, in around this area here, resistance on the round the bottom at this point before it broke down. So yeah, IMAX, same scenario, and then Cinemark, CNK, that's the next movie theater to play. It's playing off the 20 moving average here, same way, same scenario here. So there's your theater plays there. I mean, the most notable ones: Cinemark, IMAX, and AMC. Clearly here, they're in a position where they can get catch a little bit. When the S&P 500 make up his mind what he's gonna do for all these bonds next day or two, meaning Monday, Tuesday, whatever per se. If they don't break outside the band here, you got a better chance for some kind of real round the bottom. If this area complete itself, this round the bottom that's trying to play out here, it's trying to play out. But if it plays out properly, you might get somewhere around there. If that this area here, they're bouncing, come on up some. Oh yeah. I like that. I've been looking at them anyway, but but no, I did not know that though, over Brandon, and I typically be up on that. That next Friday it was going to be that that completely opened everything back up. So that's a good data point.
Yeah, I heard that Wednesday this week. I was like, oh, AMC's trying to open back up. Went right on my phone, bookmarked it in MS Money. Start looking at the stock.
And the volume starting to thin out. Look at that downtrend volume. That thing, meaning the sellers are starting to exhaust themselves. Again, y'all know how this stuff works. You know, when markets are, you know, hold up, let's squeeze momentum. Starting to show that you know, a trend reversal when the selling opposite thins out or the buying thins out. Either way, you're gonna see that reversal. So it's kind of slightly in the downtrend, slightly in terms of the volume. That means the sellers are starting to get exhausted a little bit, and squeeze momentum shows that too. So we'll see. So Cinemark, same way. So let's see, 24, obviously. Back up towards what? Basically 24, 25. That's this all day, every day with this stuff. So 23, 24, 25. Right? It's in that window. Clearly. It's me even trying to be intricate on this one here. So yeah, so next month. So that ain't even got 23 CS. So 2250. Yep, and then 25. Yeah. Yep. There it is right there. There it is. All right. All right, so that's the
And
movie theater.
this is just playing it on them opening Friday. This coming
Yep.
Friday.
Because the AMC open, well, you already know everything else gonna ride too. If it ride, meaning they catch a bid into it or off of it, then you best believe those gonna be the sympathy trades of the IMAX and Cinemark. Those three founded, movie holding plays. You know what I'm saying?
Okay.
You want to look at those in that perspective. Of course, that's just this contract only. It's nothing underneath that April 16th play. So, those gonna be. Those numbers, like I said, you get a little, maybe a 1 or 2 down days, maybe this week. Like, say for instance, we open up hypothetically Monday down. All right. Well, you already know you could probably get this a little cheaper. That 22.50 gonna be a little cheaper. Give or take how much. Same with the 25. Right now, it's in the $1.25. You might can get this, close to that of $1. Right. Who knows?
Mhm.
Right. I'll take it. Right. Because again, you're still putting yourself at what? Basically at base support, mean if you buy at that point, well, what's your stop loss? Right. Again, if you want to be liberal, down what, 22.50? Right. That's outside it a little bit. Every time to flake, but you still at more what? It's still at peak point of profitability. This close down, right? At the band here.
Mm-hmm.
Again, that's just my little opinion in that. But that's where you at, right? That's where the RSI probably sitting at around about 35, 38, whatever, give or take. Right? So yeah. Well, that's Cinemark, of course, what we're looking at, but that's how I'll be looking at that. Me personally, of course. Okay. So that's
This
it. So, yeah.
Go ahead. It rides with the S&P.
Yeah, this is correlated. This is a convergent trade. Yeah. That's why I say that's why I was showing you with that AMC. AMC then pretty much diverged from what? From GameStop. It don't mean it can't converge again, but AMC, man, it broke away from GameStop. That GameStop mania. GameStop on his own right now, bro. They on their own. Right? That song, Pat LaBelle. What was that song? Her and what was that?
Michael.
Who it was? Oh, yeah, I knew you probably know, Brother Rick. Who was that?
Michael something.
Yeah. Forgot the guy name. White guy. McDonough.
Michael McDonald.
Michael McDonough.
This GameStop, this look like AMC chart.
Yeah, the GameStop. That's what I'm saying. But no, AMC then broke away. Right? It broke away from like we looked at. It broke away. Right? There it is right there. See? Like we said. So this AMC, the blue line, this GameStop down here. GameStop. GameStop, they better get right. But it is billing out this little handle though. So it ain't over, but it's trying. I would say GameStop is trying. Big old cup. There's the top. Here's your handle here. Into that gap area here. Of course, into this bullish engulfing candle here. That's clearly a handle area there. That's why it's kind of pinging around that point here. For support, this low on this candle is what, 182. So 182, obviously within this candle area here. So yeah, it's just what we needed. What was the RSI? RSI at 58. Yeah. And it's going into earnings. They got earnings next week, so I already know this game gonna be crazy next week. If GameStop have, man, I don't even want to talk about GameStop. The premium is just stupid expensive, and I wouldn't even tell any of y'all to even think about trading GameStop. Right? This is definitely for a person that want to, you have to be more strategic in this. To buy premium outright, it's not worth it. You're gonna have to definitely straddle this thing, or strangle it, excuse me, in that perspective, because you need a, you need a box, you need to kill box for GameStop. Unless you really got money to blow, you need a kill box. It's just too volatile. That's a lot of people that already lost their stimulus check trading GameStop, thinking they were just gonna ride out. Now they might have bought it day as they fall, bought contracts fall, they could get, money would have took them, but they ain't trouble. Right?
Oh.
So look at that. I mean, even though that's still, ain't really, relative to that of what the stock doing, because y'all know it's moving on a whole new different paradigm, right? All right. So this is, again, those hedge funds. They're like, no, we don't believe you. You need more people, right? But those who bought GameStop, like I did, I literally bought 4 shares of GameStop in around that $42, $44 area, $46, $44 area, because that's where it kept what, it held the support at. I said, you know what? I'll be your Huckleberry. I'll play with you. I'll put, I ain't gonna put you more than that, but I throw about $180, some $190 into it. And see right here, hence my line there. But that's the support. It played it at around that $40 area. So I bought like 4 shares. I bought $2. I'm gonna skip it 2 shares. During the middle of February, and then I bought a couple more. Around the or around the 20 something like that. I bought some more. And I got an average around by like 45 plus, something like that. In this stock, 4 shares, and I got the little rise. And I'll be true, I did not sell it. Right? I did not sell it up here in the 360s. I should have, but I was like, nope. You know what? Let me see if they really about that life, right? So I'm going to see if they really about that life. But no, I wouldn't. I mean, the fundamental game. This is night and day between this and hold up, what was that? What was that tip, right? Then AMC. So in the earnings, it's hard to call. It's gonna be hard to call. Right? So nobody knows what the spec. See, look at that. See, I ain't making this up. Nobody knows what the spec for earnings. Right? Wall Street don't even know how to price this thing in the earnings. Right? They're like, bro, whatever. Now, y'all know as well as I know. The good thing they got for them is they are now building out a board. Right? You got the guy from Chewy, he been in there, right? The CEO of Chewy, he a board member. You got Michael Burry, y'all know who Michael Burry is, right? The Big Short, right? He acts as bullish on GameStop, so he been luring people in. You got the guy from Palantir, right? You got him, on pretty much the rebound of GameStop. So you got some people coming to his aid. They trying to see if they can make an online presence for GameStop to save it. Now it's gonna come down the road a little bit, but like I say, I don't know. I would say trade this in the early, right? For even my hardcore art traders out there, they probably iron conduit. I'm pretty sure that's why they probably want to trade it, right? But I mean, the contracts are so expensive, man. Look, I mean, it's like Tesla, right? But at least Tesla had a better use case, right? But look at the contracts here going into earnings, all right? I'm trying to see the price of these premiums. Okay, so it's sitting at how much right now? 200? Yeah.
That's a lot.
That's $1,600 right there. That's the whole stimmy right there. I told you that's the stimmy. Juggernaut lost their money already. They went all in on them $1,400 that stimmy shit. Juggernaut went all in on their contracts. You know what I'm saying? To buy what they could into earnings. Dated. Now if you to my dated, look,
which means that he doesn't want.
I'm going to show you at peak point of that stimulus check. Peak point of their stimulus check got them sitting at. I'm talking about close they can to be in the money. What I'm saying, like close to they can to be in the money, right? Is around about what? Yeah, right here, 257, 262. That's your stimulus check right there. Yeah, $1,300, and that's 262. Right?
That's an expiration.
That's what. That's still next week. That's next week.
Man.
Yeah, that's into the earning.
Right, I'm saying this, but now because that's the only way they could have traded this. You know, I mean, you know, if they want to try to play. Now they could have obviously they could have went further out. Now, but further out, you're going to be out there around about with that 280, 290, $300 level. Yeah, that $1,400 we're gonna get you out that point, out that far. Watch, let's see. I guarantee that stimmy gonna be way out there. Actually, I was even trying to be liberal. You talking about 325, 300. Hey, it can happen.
And George Carter.
Don't get it twisted. I know it seems hard, right? It can happen.
You think
335.
it could be mapped out?
Say again?
You think it could be like charted out?
You can chart it. Yeah, you can chart anything, right? Honestly, right? But the thing is that, of course, this is a very volatile stock. Now, again, it could easily run 70, 80 bucks a day.
Right?
Say again?
We would have to play the volatility on it.
Yeah, I mean, literally, I mean, you okay, let's see. So let's say, okay, we did playing around. Right? This is definitely for giggles here, right? So this for giggles here, guys, right? So don't y'all be like, hey, whatever, right? So we're gonna say that we're gonna use the stimulus check, model. So even again, let's say in this case, this is what April, right? So this is April Fool's Day, right? That $1,400 still gonna put you around like we said, what was it? 340 or 335, right? So yeah, man, no, that ain't even right. It's actually I gotta go by the last price. So mid price and last price, it puts you around about 360 to be on 360, 360 and that price. God, 365. Because don't get caught up in this price here. It's gonna be the mid price and the last price, somewhere around there getting filled. So the window and the way this thing is so volatile, we're gonna say this window is between 360 and 375, right? That's the only way that $1,400 gonna get filled in that window there. So 360, 375. Right? You see what the volume looked like over there as of Friday. Right? It thinned out. Right? But that's if you try to push down that
going up 150 points.
Right, which ain't again, it ain't outstretched with GameStop. Come on, GameStop ran how much in what when it broke out, obviously in this case here, when it broke from this, it went from 40 way up here, of course, and hit like 170. It was like 190 something. I remember, like 184, excuse me. All right, that was just 2 days. So 2 days it went from 43 to basically 187. Well, I'm saying 185. Right? It can happen. Right? Round the bottom here, it came out, based out, base jump, it went from what? It base jumped basically from 99 or 100, you want to say that? It base jumped from 99, or excuse me, 100, excuse me, all the way up to what? What? Remember that day? It went to what? 350 basically. Right? That's $250 in a matter of what? 1, 2, 3, 4, 5, 6, 7, 8 days. For 8 days, it went up $250. Right? It topped out. RSI clearly, you can see it there. Momentum, opposite momentum indication. It hit peak momentum, obviously, on the 15th, right? And that was actually when it was pulling down. Of course, that's how this stuff worked, right? The volume is doing the same thing. Look at the volume. What is the volume? Oh, Rich, where you at? I don't know if he on here still. He might be busy with the family, but y'all know that we've been training around this. Anytime you start seeing what? Decreasing volume, right? And the price ain't necessarily what? Plummeting. What does that mean? What happens when you have declining volume and the price ain't plummeting? Y'all see that there?
Mm-hmm.
Typically when that happens, that means you're having a what? Exhaustion of what? Sellers. Don't make this stuff up. Where's your 20 moving average at? It sits at what? 176.24, right? So that means even if we'll play this game. Y'all know what it's like when I do that right there, right? Now hold on, let me see if I can draw that thing just a little bit.
So the wedge on the volume That's because of increase of sellers and more demand.
Well, that's what it would be billing, right? It would be billing out that area, right? I know I need to draw the real technical line too, but I'm being lazy right now, so don't y'all come for me in the bad chat over on YouTube too. I know I should have had a more straight lines on there, but I'm gonna just do these rough lines, these crayon lines, right? These color crayon, Crayola. Right, here's our Crayola moment. There's your base so-called quote unquote, you know, all the way as of what? As of today. $200 support has been holding. We know we have some weeks down here, granted. But this $200 area, well, between that and 198, whatever, it's been holding. So we're used to hold all the mark, right? This is GameStop. It's volatile, it's all outdoors. So it's starting to what? The volume thinning out, right? Look at the red, green, red, green, red, green. It's starting to thin out. Now, here's the juggernaut though. Here's the look. Here's that man, that earnings. All right. That's theta kill day. I got a feeling that's gonna be a theta kill day, a theta burn day. People trading the earnings. I give it to you. People that don't really care about that $14 stimulus check, they gambling. I'm just going to say it, they gambling. Right? Be honest. They like if the earnings is, you know, of course, you know, they don't really have a true fundamental case, but if it ain't as bad, they're just trading to get any kind of data point that says that the earnings is not as bad as it is expected to be, right? Because that defies what? The analysts who are super what? Bearish on it because they just know this is kind of what? It's just ludicrous, right? For the stock to be up this high. You have no business being up this high, right? Okay, let's go over here to Earning Whisperer. How much y'all think they're gonna probably expect to make on their EPS? Well, it's too late. I already hit the button. Right? Look here. That's a net positive now. That's not in the negative. They expecting about $1.53.
That's what's going on.
Now it didn't drop the whole lot, you know, obviously in relation to where it was when it was just making money from organic growth. Look at the sales. Now keep in mind, it's still making money now. This right here was actually making more money than what? Than AMC doing this what? This moment because AMC had to open their doors to make money. Make sense? GameStop still could what? Sell stuff what? Online a little bit.
A big demand though. Like the demand for what their products is too huge.
Well, here still, I'm not gonna say this over, and like I said, every man, you know, everybody got their, you know, their strategic perspective, but I'm just saying it from a place where do they make more than money online or brick and mortar?
Who, GameStop?
Yeah. If you had to, you know, get.
It's hard to say because those stores stay full and people always buy it online as well.
Hold up though, but I'm saying what is the most, what would be the strength, the online or the retail the retail, excuse me, or the online?
I'm gonna go with online because we've been having like we just went through some kind of stay at home, use the internet type structure.
And that's what it is. Again, that ain't up for debate. Again, this is when you get into the idea of putting your analysts together in this, you have to map this thing according to what, you know, is presented, or when they say what the market offers you at this moment, right? Now, so with that being said, of course, them trying to build out their online presence is obviously, you know, vital for them, right? Now, some GameStop will still open, some of them what? Because we can go back and read through their fundamentals and see what was open, what was not, what they closed down, what they tried to leave open, right? I kind of, you know, pieced through it a little bit over the last year. I'm probably lost a lot of that stuff in my head at this point when it just went again to take off. But again, granted, of course, the price obviously is not reflective of what their organic growth is, no matter how you put it, online or foot traffic. The price as that now is well over is what? It's true worth, right? Because we know that by going to what? Right? Go with the FinViz, we go look at this what? It's PE, right?
Mm-hmm.
It's PE gonna be very reflective, and it's FPE, or it's forward PE, right? And it's PE, right? Even if they probably ain't gonna have it up here. See, I already know I knew they weren't gonna have it, right? Because it just okay. We do price to sale. We just throw its price to book is at $5. It's cash to sales at $6. It's price to sales even, you know, I guess on the 12-month. If you want to say that, not 12-month, but it's natural price to sell at this point. It's still sitting at what? $2.73, right? So you can pretty much I count that into what is what 4 PE and its regular PE sitting at this point. That's why they ain't got it up here, right? That thing probably way up in the thousands. Well, all of a sudden because it's just because of it's being bought the way it's been been bought. That's why they don't even have it up here. It's just crazy. Price to book on the high end is sitting at what 39, right? This is off the free cash flow. I mean, you see it's red, of course, right? But this thing it's all over. Look at the income. Right? They still at a negative in terms of that, right? Sales is again. I have to really, I'm telling you right now, my mind is fried. To really give you a more thorough, we're gonna come back and revisit this. I just say that we're gonna come back and revisit this. What's the day? No, probably tomorrow. If I go live tomorrow, we'll come back and revisit tomorrow when I have a fresher mind. So we're gonna have to go through all these because the downgrades alone, or just the analyst prices alone. Okay, we can backdate them probably at the beginning of January and play from there. Even though we know we have to still respect all the one way back in terms of October, all that too. But we'll just play that game. Nobody wants to stick their neck on the line and say, well, hey, here's a a buy signal, right? That would be them getting out cold, meaning the analysts getting out cold. If anybody, because all people gonna stick their neck out at this point is gonna be again Michael Burry, right? But even he knows that this price is just ludicrous, right? So it's hard to kind of really map it from a price ratio perspective. Of course, you see they got a little trend coming down here at sitting at 280 at a top wedge position there. You got again the bottom here. This thing here. It's messy. It's messy, bro. It is messy. Okay, match it is. Would you be bullish on this or bearish on this going into earnings? Over Mathis, I'm just hypothetical. It's not putting on your spot, Corey. We having fun with training.
This is one I would try to, if I could, like hedge it out, because either way.
Smart man. All right, so this moves in towards your perspective a little bit, Brother Rich. So, okay, so let's look at the hypothetical, right? So that's next week, right? Let's look at next week's put call ratio, and then let's look at the highest error or the interest points, I should say, excuse me, within that, right? So, all right, matter of fact, let me, I know I can't even shorten it down. So let's see, really quick. All right, so you got, all right, so yeah, you got, you more about, you about the top side about about a 60-50% differential, right? In terms of put call ratio, right? So it's still call heavy, right? But on the openness on the put side, what you see is it's lopsided, right? Definitely lopsided on the put side, right? So let's go see what the volume's at, all right. Okay, we got 150, right? That's 150 strike puts, right? Right. It's sitting at again. You see it? That's what. That's $11 for that put for next week. That's basically $1,000, right? So that's somebody's stimmy check, right? That's a bear, right? Right. That's a stimmy check, and you got me a couple of dollars to buy you some popcorn and a pair of sneakers, right? So that's it.
Just say they was hypothetically they was taking a stimmy and hedging it, right? So you would have to go all the way down to like 130 puts. So
no, that's what. Yeah, see right here. That's the full stimmy. The full stimmy is sitting at right here between 150 and between 150 and 160, right? Because right there, $14. Somebody got last one got filled at $14, which is all right. Look at this. Look at that's look at the spread on that. The spread on this here actually $2, right? I mean, excuse me, in this case would be like $20, right? Right, because we talking about $1,600 to $1,400. So that's basically, it's crazy. Well, it'd be 2 points from that perspective, but that's crazy. So that's at the 160. But again, definitely here, that way you can save a couple dollars at least, right? That 150, because it's everybody kind of ganging up at that 150 strike put, right? So this is the people betting that this thing gonna what? It's gonna tank on earnings, right? Now you talking about that's a $50 drop. Is that out of the question? You know, or is that a hard press? GameStop drop $50. You think that's
No.
right?
So look at the call. Go back to the
Look at that. Oh, go ahead. All right, let me go back over here. So I'll go on the call next. I just want to show the puts. That's the weight, right? That's the weight on the put side. Hold up. Oh yeah, that's the most weighted area. Okay, beyond 70, all that, but look at it. Even 100. Look at 100, bro. Bruh. Bruh. Look at that 100.
All right, go down just a little bit. Scroll down.
Which
to
one?
about
Up or down?
130. 30.
130. All right.
Go to 130 strike price.
You got 820 sitting there and 1200 on the open edge. That ain't bad.
6, 7. Yeah, that ain't bad. 6.
Same way here, even the 140. Right, that could cost you about $8, $9. Yeah, 369 sitting there. Right. Again, that's a $70 drop. And then that's also what? A $60 drop. Look at that, that's a difference between $60 to $60 to $70.
The 270 calls.
I see. I'm finna go over there. That's why I'm here next. I want to kind of get here. Let's show you how wild and wacky this thing is. All right, so 270. You probably gonna be sitting there. Yep. That's the stimmy check. That's the stimmy. That's about your entire stimmy right there.
Look at the 250s.
Yep.
Open interest.
Right. That's outside the stimmy. Now you gotta borrow money from daddy. Dad, let me get $200, man. I cut the grass.
Scroll down. Go.
What
higher strike price 300. Go to 300. What that one?
Not bad.
It's still way out there.
$100 mark. That's a rack. You gonna put a rack? $400. You got $400 for what? For movie, some dinner, and some chilling. That's it. All right.
So it's a possibility for this stock to go up.
What's either or? Like I say, this is obviously a what?
All the way to 300.
What's the better trade? A straddle or a strangle?
Not trading at all.
My man.
Not trading at all.
Right? Yeah, unless you got that kind of capital. Like I said, the only way you want to do that if you got capital. All right. But if we're to put together a thesis, of course, strangle, straddle, right? You guys know what a straddle is. Y'all know what a strangle is, right? So everybody's watching on the YouTube side of the house that maybe knew this. So a straddle, all right? Straddle option. All right, straddle. So that way you guys know, because we talk about this stuff a lot. Understand the difference of a straddle stringer, right? So we'll go to Investopedia, right? Straddles and strangles, right? So basically, a straddle is what? Is one way for a trader to profit on price move of an underlying asset. Let's say a company is releasing its latest earnings. There we go, right? Results in 3 times. So, but you don't have an idea whether the news will be good or bad these weeks. Obviously, before the news would be a good time to enter into the straddle because, again, leading up into the news, we talk about that, right? So, in this case, let's assume the stock is traded at $15. So, suppose a $15 call. June, I was priced at 2, while the $15 put was priced at what? $1, right? So, you talking about buying what? Both what? Strike prices, right?
Mm-hmm.
So the $15 call and the $15 what?
Put,
right? That gives you, again, in this case, of course, you see a what? A $2 for that one and $1 for that, right? Of course, in this case, that's your net, as in this case, the net debit as expected. But or 300, what, 100, so $300, right? $300 in this case, I guess it's like $2. So they're doing a intrinsic value of 100 shares. So basically, $300, right? So let me see here. For the call, yeah, I read it right. Why am I tripping? Am I not seeing this? Yeah, $2 and $1 for the put, I guess, and the and $2 for the call buy, right? So that's the window that you're playing within that, right? So it's $3 per share directional value that you're trying to play within that window, right? The strangle, on the other hand, is what? You're playing what? While the straddle has no directional bias, right? It's more what? It's used when the investor believes the stock has a better chance of moving in a certain direction, right? But would still like to be protected in the case of a negative move. For example, let's say you believe the company's results will be positive right? Meaning you require less downside protection. This is more of a what? A directional bias, but still trying to what? Play in the event that you have any kind of what? Anomaly in the stock, what goes the opposite direction. Like when I do my, if I'm trading the SPY and I'm doing like a 2 down and 1 up, that kind of thing. If I think the trend is still down, I'll play 2 to the downside and 1 to the upside, right? That's basically what I'm trying to do in this perspective. So instead of buying the put option with the strike price of $15 or for $1, you may be looking at like a $12.50, right? That has the price of 25 cents, right? That trade will cost you less than the straddle and also require less of upward move for you to break even, right? So in this case, let's say, let's run over here back to the bar chart where we at. So at this case, the strength seems to be lying at that in terms of the call is basically, man, look at these jokers even out here.
Yeah, because the call just to get one of the 700, it was way up there. But to get one of the puts, it wasn't that far from the strike price.
Oh, so y'all want what? Y'all want to do 300? Y'all want to play the 300, or y'all want to play with the? Let's play the 300. Right. So that just oh my goodness. So a straddle just out of the question. Well, no, it ain't. Well, it probably would be because I can imagine man, that put is gonna be. Yeah, you would. It's no way in the world you would straddle this. Of course you would straddle this. Ain't no way you can straddle this, right? Let me just say that. Somebody tried to buy it though. Look at that. That's hedge fund. That's Melvin Capital right there. That's a put now. The $300 put. Hold up, where is it? I just had it. My bad. Excuse me. That's Melvin Capital. That's what was the other companies? I forgot the name of the company. They also on the Citadel. I think they are. 71 people bought that put right there. Y'all see how much that cost? For that put by? Are y'all seeing this? I know y'all probably see it. Y'all like, oh, man, what you talking about, brother? It's late. That's $10,000 for that contract. That's $10,000 contract right here for a $300 put. So of course, ain't no way in the world you're gonna straddle that. At $300 for the call and $300 for the put, right? I mean, you gotta be about that life, right? That's a net what 11,000, right? Yeah, it'll be 100 10,000. Yeah, 10,000. Joe Smoke, you're right. Yeah, right. So that's $11,000 net basically a net debit, right? In that perspective for that trade, net debit, right? Right. So yeah, that ain't gonna happen. So the only way you can trade this probably the strangle, right? I mean that'd be only. It's other stuff you can do too, right? Well, I don't look. It's late. I ain't finna burn my brain out. But you probably you're gonna have to. You're gonna have to conduit. That's the only way you can trade GameStop. You got the iron conduit, right? So you got to probably make the be free with the iron conduit. That's more strategic. That's definitely more strategic strategy. So again, of course, some of you guys want to read up on it. Iron conduit is definitely playing what we call, like I like to say, the probability bell curve. That's your probability bell curve perspective, all day, every day, right? So it's very it's a spread trade. It's a spread trade, right? So what is iron condo? Iron condo is the option strategy. Of course, we get it, right? So it's structured by selling one call, right, and one put, right? Same expiration date, of course, right? On the same underlying instrument, right? All 4 options are what typically out of the money, right? So although it's not a strict requirement, but you definitely dealing with out of the money. So the call spread, put spread are equal width, right? Thus, if the strike price of the 2 call options are what 10 points apart, then the 2 puts should also be what 10 points apart, right? So, all right. So, okay, for the sake of that, If we go back to the chart, if we say, if we're gonna work out the most, I don't know, we'll just say the most recent high. We'll do that. Recent high, most recent high. All right, come on, thing. All right, come on, thing. Out of the way. All right, so that's yeah. So it makes right here. I'm like, I don't need to even go any further than that. That's the window here. Right. So, man, that's a wide. So that's what? That's 3.
How far out of that? Like, puts and calls you by.
Yes, you might. Well, so 348, and we got a base of what? 200, right? So where's the middle in that? What's okay? So the middle will be sitting there around. So 350 and 200 is what? What 175? Ain't that what it is?
Yeah.
Yeah.
Am I wrong? Or, yeah. So what? No, not 175. Excuse me. Goodness. 2 set. What? That's gonna be 100. So basically, 350 minus 175. Forgive me, guys. It's late. What is that?
350 minus 175.
Yeah.
That's what you're asking?
Yeah. I'm sorry.
That's
right about what?
25, ain't it?
About 2. Say again.
No.
No.
275. No, I don't know. I have to look that up.
It should be like about 280, somewhere around there, right? No, hold up. God dang, man, it's late, bro. It is really late. When my numbers get to run all over the place, right? So the middle here. So the 175. Excuse me. So hold up. Somebody finna get that numbers. So 275, Joe. Yes, I think he got 275. I think I said yes. 275. All right, give or take. Right. God, dog, boy, it's late. There we go. All right. Yeah, there we go. Yep. So, hold up. Right. Let me get that out of here. That's probably why I was messed up too. I'm sitting there trying to look at that, like, bro. Yeah, that's it. No, straight down here. There, 200. Right. So 275 puts us about right around the area there. Right. Cross axis is. Right here, right, which is ideal because again, it's gonna be people sitting there. Look at the resistance here, right, or whatever, right. Even though you kind of tapped it up here, 277, but you got movement in around that area, right. You got a candle here, you got this guy here, on the daily. We're using the daily here, but that's gonna be the area of interest. So we'll say there, right. So right around here, right. And around the area. So basically at the top of the integration band, right? Golly, man. So you need this thing to be, in around this 275 area, right? In around that 275 area, to really, really, benefit in that perspective, right? In around that area there. Hold up. Right. So again, most often online is one of the broad base markers or index in this case. So let's say they just talking about different aspects. All right. So it would be kind of like buying the. So let me see what's the best base case they got here for the 110, 95, so 85. So this is 75. So yeah, so you'll be buying anywhere from 300, so 350. So
it would have
Monday
and Tuesday to make that happen.
Well, this is clearly next week. So 280
earnings on Tuesday.
Yeah, of course. I want to say this is next week expiration. That's exactly what I'm saying too. Meaning that's what we be buying it for, right? This condo for it, right? This is 275, 280. That's your mid price course, or your equilibrium place. That's what's out of on. This is more in the money. Excuse me, the cost. And then the same would be Hold on, where we at? 75, 275. So yeah, so man, that's like goodness gracious. So what? That's what? 275. So 50. Goodness gracious. Way down here. What? Way down here? Yeah, that's why I was heavy at the $50 strike price. So I'm just saying, so 175 under 200 obviously $50, of course. You know, excuse me, 25. No, is it 25? Yeah, 25. The 50 don't even make sense. I mean, the 25 don't even make sense, but I can see why a person would try that just to be crazy, meaning they'll, you know, well, I'm not. I take that back. I'm not going to even think about looking at no $25 strike price. So it would be more around, I would do like maybe 100 area. I'll be 100 area there, and then possibly how much is that contract? 270. And I'll be looking at the particular area around what's the three? The three was three. The top was like 375. Man, the 400 area is even stacked up. That's a crazy trade. That is a crazy trade. That is a crazy trade. No matter how you put this on, if you do a 350, excuse me, even if you did a 400 and a 100, that's a what? Net of what? 150. What was the other one? Excuse me. Hold up. Yeah. 269. So around about what? $600. Yeah. Not bad, but man, probably about that'd probably be the only trade. And again, this is a hypothetical, guys. Don't y'all come for me. Don't y'all take this trade. All right, not the real money. But I mean, if you know, if you want to try to be a daredevil, right? A daredevil. Of course, you know, that's just really pushing out there in terms of 400. Even you just play back to the high, which is around that area where it hit around, you know, 375. That still ain't bad, because it's still around about $1 different, $1 plus different, $1.50. Because these numbers are not right, of course, at this point Friday. But I'll play at that 375 if you want to do that to the 100 put. Right, that's what a debit about 565 and 100. Yeah, about 600. Yeah, I was right before, around about $600. Between $600 and $700, you'll pay for that trade. Just how to play it within that box, that kill box, right? You have to be willing to lose that $600 though, right? 600 and change, but that would be the box, in my opinion. Even though we know it's a difference of that one's in there, but that would be the kill box I would try to trade it around. Me personally, right? Me personally, if I was to do this hypothetical, it would be at the high, back towards that high. So we'll say 375, 380, right? Which is a stretch. That's a stretch, right? But I wouldn't risk any more than that. All right, me personally. Back towards $100, and I do the $100 put. Wait a minute, that was the put, excuse me. So I take that back. So the put, $100 put sits at 270. The 375 or 380 call sits at what? Yeah, 5. So yeah, so around $700. $700. There you go. There it is. So I'm gonna put this paper trade on. I'm gonna paper trade this. I'm definitely gonna paper trade that, and just see what comes out of that. Right? I just, man, that's gonna be a wild trade. I blew my brain up even thinking about this old silly trade.
Hey, but, right there. right there. Oh, okay, you see where you got that curb at? So from there, that's what the bottom is. What 200 on that
Yeah,
bell
yeah, yeah.
curve.
Oh, right here. Oh, yeah, yeah.
Yeah.
Yeah, I'm sorry.
And the top is what? That's 350. So
Uh,
between that space, that's
it's
170. That's
yeah. I see.
175. The
Right.
middle
So
would be.
yeah, go
Now
ahead.
check this out. Now take the 175, right? And then you go back to the bar chart and you put that on there. You do the bigger number first and then a smaller number last. So I would do
Right.
and divide the 175, right? Like check it out. Do 175, no 150 for to add it in the strike price is 200. So go up to 350 like you had it, the 350 calls, and then go back 75 on the put. So it'll put me at a 125 put price instead of the 100.
Right. And the reason why I said the 100 because you're gonna have some weight at that 175 too a little bit. So you see it there? It ain't a whole lot, but it's there. You see what I'm saying? Reason why I said the 100 because if you're dealing with round whole dollar marks, you know how traders are, right? They sheep, right? They crease the habit, right? Right. And both of them actually pretty weighted there too. I take it back, but yeah, I mean that's the better kill box by all intents and purposes, right? 148, 255, right? Clearly, right? But you see it there. It's only what this for that put. Hold on, I'm in the put section, right? Yeah, I'm in the put section. All right. That kill box there is very ideal. Again, that's $590, $600 for that strike put, right? The 100 is sitting at, see right there? You see what I'm saying? You see what I'm saying? Over. Because that's still 4 days out. That's why they loaded there. That's the difference of how much? $4? In this case, give me $40. Let's see, hold on, what at 125? Where we at? Yeah, right here. Yeah. So 590 minus how much that $100 strike price? Yeah, 270, right? So you're talking rough around what, $3 somewhere around there, $30 basically, whatever. Right? Yeah, that's exactly why I want to look at that that $100 area because the how liquid whether this stock is so liquid, of course, it's gonna trade like Tesla, right? Because let's see. I'm curious now. Yeah, I'm gonna go look at this doggone these Greeks on this
That
thing.
showed that the volume was higher than the open interest. That's
Yeah, and I'm only saying that because again, they stacked up around that $100 area for a reason, because they want that they want that that superlative drop, right? Or even if don't keep I don't have to come all the way down to hit that strike. All we do that thing to come down under 150 or even probably 160, 150 there, you probably do pretty well, out the gate, before it gets crazy because that's still early in the week. But let's see, I'm just curious. It's probably gonna be some more crazy numbers.
and go down all the way
look at that
down.
volatility.
Look at the volume on that.
On which where is that?
In the look at that. Oh, go. You on the wrong one.
Yeah, these are the puts. I'm sorry, I'm looking at the puts now. In the Greek section. Oh, let me come up at the top because it's gonna be at the top. Oh no, they moved it once you do the Greeks. You talking about the put to call ratio, or you were just talking about
the strike prices?
All right, so just regular strike prices, not necessarily the Greeks, right?
Yeah, the options. I mean, hold on. Yeah, just go back on that and like you was in the regular pair when you first click on it and then you hit option prices.
Okay, yeah, because I was looking at the Greeks. That's why I was trying to make sure I'm tracking you. All right, so these are calls close to end of money. Then I got to go show all of them because it's GameStop. It is GameStop. Okay. All right. So which strike price do you want to look at? I'm sorry.
Just go all the way to the bottom.
To the very bottom. So you're doing the gamma thing. Okay. Gamma. Your gamma sit at 2690.
Look at that.
I mean, no, but that's what Wall Street Bets is doing. That ain't far-fetched. That's not far-fetched. That's what caused the last gamble squeeze. That's what caused it in games. AMC, right? We gambled out at what, $5? No, was it $6 or $5? We gambled out at $5, I think, on AMC, right? Everything beyond that was, purely a gamble squeeze, right? So that's why we was able to go from that being the top, always like $20, right? There was no, shield or cover for what short sellers. They just got obliterated. Right? That's how they ran it GameStop up the first time. They priced this contract way out there and forced the shorts to cover. They had the shorts to cover time, days to cover time on their side. They had the peak point of short interest at that point. Obviously, it was over 100%. That made it actually illegal. But you should not be able to borrow against shares that are not available, obviously, for the outstanding share structure or that of the float. So it shows that they were actually using that kind of CFD model, which is outlawed in America. That's why it was a big issue with SEC. Like, how can you have a short interest beyond that of 100%? You making up shares now all of a sudden, right? So anyway, that's why they bought those contracts way out at that time, and which caused that gamble squeeze. So now they're sitting at 690. Of course, they stretched it out since then, but that's why you got all people sitting out there, right? They're tested, right? They can easily test it. No position can actually make money if this thing go up on earning. This can make a few dollars, right? It's money, right? If it run up. I say 300, 320, 325, 350. Definitely, above that, you'll see a little uptick. Now, if it has to make a big move out the gate, though, it can't linger around because you're gonna have a theta burn. You're gonna have a premium deceleration on earning because it has to move. If it don't move, it's what everybody's gonna get roasted. And that's what I say. This is how the thing can play out. Man, this thing could just kill everybody. It could just one big premium burn, one big theta burn. Or it could move. It could potentially move, chart perspective, yeah. You see it. You got a falling wedge here going into earnings. That don't mean that, but if you saw this without earnings, you'll say, okay, well, that's a cut the handle. It's starting to kind of complete the handle here on the pullback here. Your volume is thinning out. Clearly. Here you go. All right. Yeah. Crazy trade, bro. But like I said, I am going to paper trade it in the earnings. I'll reveal my hand Monday. Correct? I cannot put a trade together in my head. I'm exhausted. I'm mentally exhausted. I'm gonna have to go look at the straddle prices. I'm gonna have to look at the best straddle scenario. I'm gonna have to look at the best triangle, and then I'll look at that conduit, right? And there's other things you can do, within the, certain spread scenarios. This is crazy. Since we hold up, let me see something really quick. Hold up. Let me see. I'm curious just to see where's that let's see here. Let's see here. Give me 1 second, guys. I'm sorry. I know I'm kind of out of here. I'm checking something really quick here. All right, so let's say that's the so let's see. That's gonna be that will be right. Not just that though. All right. And the top, we said, what was that? What was that top? 350, 350, 375? Yeah, no, 350. 350. Let's say, all right, so the 350 and the 100 is a debit of what? 940? That's, I doubt. Let's see. I mean, that's still that's 940. Yep, debit. Oof, not bad. Like I said, the straddle just forget about the straddle. Ain't no straddle that happened on that. I mean, this is clearly a strangle, right? There ain't no other way you can straighten this. Either strangle or condor. That's the only way. I mean, unless you just really directional bias on this, that's the only way I would trade it. And I would still be more, I don't know. Yeah, my sentiment is just going to be bearish until it, unless something crazy happens. I'd be more 2 down and 1 up, if anything. That's the only way I would trade that. Unless, again, if I'm just doing 1 for 1, that window I said before, that would be the window I would trade that in, just on GP. That 375 or excuse me, I don't keep saying 375. That 350, right? That 350 area. And that's what I'm saying. If I'm trying to stay underneath $100, that would be the window I traded. So that 350 back towards that $100 area. That's the only way I would trade this. Inside of that box. Of course, that's a strangle. That would be a strangle pattern. Or a strategy, excuse me, a strangle strategy. That puts it somewhere around about $800-900 for that position. And so, anyway, yeah, GameStop hurt your brain, right? Hurt your brain, stop, right? That's basically what it is. But yeah, good luck for those that want to trade that. I'm not gonna touch it, but I'm gonna paper trade it. I'm gonna come up with a strategy. I'm gonna paper trade it in earnest. We'll see if it come out right. We'll see how that turn out. Let's see, where is that 120? Excuse me, so 90. Yeah, so in around that area there. Golly. I mean, but it's showing support so far. So Monday gonna be interesting. Monday gonna be interesting watching this stock.
Would you buy the stocks outright, like 5 shares?
Well, actually less risk because you can put a hard stop on it, right? But I mean, options are gonna get roasted. Options gonna get. I mean, somebody gonna make a lot of money.
Oh yeah.
Right? Potentially, somebody can make a lot of money, or they may pull the Okadoke, because I've seen this happen a lot of times. At the rate of the volatility that's in this stock, man, the volatility that's wrapped up in this stock right now, shucks, man. See, I know better from looking at stocks that have very extreme volatility. You see them volatility levels? That's close to near the money. You up here in the 300 on volatility. I mean, from the 155 all the way out to 245, you still playing around 300% volatility, implied volatility, IV. No. Right? That's a lot. That's a lot. Right? I mean, I've seen IVs higher than that before, but GameStop is just retarded, though. I mean, it is, yeah. Like a better term, it is one of those.
That's
go ahead.
That's the implied volatility.
Yes.
IV.
Yeah. Look at the $10 strike calls. Look at what's down there. Look at the 25s. Right? You see that? Look at that. One person bought that contract. That's $16,000 trade. That's a yeah, that was a 16. Hold up, where is that? Yeah, that's a $16,000 trade. One person bought it Friday.
So how do you know they bought what it? Oh, it says that March 19th. Okay, I see.
Yeah, next week, one person bought it Friday. They bought that $25 strike call by for 16,000. Head, straddle position, whatever. Excuse me, strangle position, whatever. Right? Credit spread, whatever. Right? It's there, man. Market's crazy, man. You people crazy, man. They crazy. $100 strike call. 10 racks. 50 people bought it.
This is not good, guys. This is not good.
I mean, there it is. That 200 is 3,000, and like I said, the 300 is at yeah. God, it's like it ain't even missed the boat. Again, 32. Yeah, to 300. So that's 1,000. Look at that. They loaded. Them jokers loaded, man. They loaded.
There's one up there. They look like that. Oh my God.
It's gonna be funny to watch. Well, I don't say funny. It's gonna be fun. I just say it's gonna be fun to watch it. Right? It's gonna be fun to watch.
Oh my God. This isn't open.
Oh yeah. All right, so I'll leave it alone. I'm gonna just leave GameStop alone because I mean,
That's how you get smoked.
yep.
Good. Yeah.
Let me see.
Oh my God.
I know I should have stayed away from this stock, but you know, we burnt some good. Yeah. Let me see. I know Zach probably got it at. They got to be sale rated. I don't see them being anything but a sale rated. Let me see. Oh, they ain't got. They just showing. They typically show. Oh no, this ain't the detailed report. Yeah, so I ain't. Yeah, I'm not familiar. Maybe 21. I said they're gonna make some money, but it depends on at what level. Cause I mean, it's already been down. I'm sure it's already been, whatever, yeah. Yeah. Young traders unlikely to buy GameStop with stimulus checks this time. Bank of America says, yeah, okay, yeah, whatever. They already done bought it. For the first tranche of people already bought it. These next ones might be like, see, I told you don't buy it. Right? That's probably the only thing. Be scared them jugger possible. GameStop is losing this stimulus support, right? Yeah. But some people out there still trying, though. They still trying. Or they're definitely going to attempt. So. Yeah, all those, like I said, we looked at those already. So yeah, all right, we'll leave GameStop alone because it is purely going to be a gamble. Either way you look at it, it's going to be a gamble. I mean, there is money there on the books, selling online. They got some people that came in and buy during the holiday season, but they've already had probably been lowered at this point. I mean, their expectations obviously going into its earnings has been lowered. I mean, shucks. What's that? Hold up. What is it? Let me see. Hold up. Now, what's that? What's that website? Well, hold up. What's my old one I used to use? Was it short ear? Short seller. Interested on this one here. We'll go to we'll do now. Hold up. Okay, did it pull up? It did. Hold up. All this drawing up here. So you got as of now, they're what? Only 50% of the float. So you got some shorts that's getting ready to cover too. Right? So you got 0.4 days to cover. It's down substantially, but it's been trending around 26-30% short interest. It was up near 50 something to pull back again. So you all are sitting at about 26% people trying to short it. So, yeah, that's pretty decent short interest going into our earnings. Granted, it still got some opportunity to move. It still got opportunity to move in terms of the shorts cover, right? Or they can pile on. So again, you see the float value at this point. It's showing shares float is at 14 million of that. So again, that's that roughly 26%. Yeah. I mean, if you price in a 20% premium on that at 200%, that puts it around. Yeah, that puts it close to around about that area around about 330, 350-ish, around low 300s area, somewhere around there, give or take. Yeah. So again, that's just at that point of a lot of shorts. Let's see. I know I'm rambling. It's late, man. It's late. I'm rambling. I'm hungry. But that's why, that $300 area. That's why that $300 area would be about, that would be the line in the sand for the real optimistic call buyers that really bought that life. They want to risk that, that $1,000 for that 300 call strike. That's it. That's what I was saying. 300 would be optimistic. 350 is kind of being more safe. And then the same would be for the put. The put would be the same rate, in my opinion, of course. I know Brother Matt said out at 125, but still, within the window. But that's why they're sitting at that 100 though, for a reason, because they want that they risk profile. Basically what that is. They're not willing to put a whole lot out there for that trade. So, but it has a probability. It definitely has a probability. All right, guys, that's it. So let me get out of that, man. My brain fried on that one. And fried on that one. Yeah. All right, so I guess we kind of pretty much hit everything. And anybody else had another stock before we roll out? GameStop didn't beat the brakes off. They didn't beat the brakes off. Sitting there thinking about it. Hey, what's going on, Oversell Line? What's going on, Brother Ramsey? You guys over here on the YouTube side, man? You got some jokers still over here, man. You know what I'm saying? What's going on, brother? The Snot Bomb, right? Yeah. What's going on? Yeah. Family over there. Brother Everything, Brother Blue Cousin. All right. His family popped up over there. Yeah, so that's it. So that's what some of the ones that we kind of hit here this evening. I think we got some couple little favorite ones. Anybody else had anything else that they looked at or wanted to look at on the way out the door here? So keep in mind, tomorrow I'm gonna get another session in tomorrow. Some fresh brain cells. All right, some fresh brain cells. And we're gonna look at some more strategic plays because again, we do got earnings. Some good ones this week, I say a few good ones. We got a few nice ones this week. Of course, y'all know I'm definitely excited to see how what BNGO is going to do. Cinex, not bad. 10-cent music, that's gonna be interesting. Let's see, we got that's what Monday, Tuesday. Of course, that Tuesday gonna be crazy because GameStop. Hulia, of course, that's one to keep y'all on. Neogen, old school. Air, of course, that Boeing perspective. Adobe, interesting. Keep y'all on Adobe. Home Group definitely one to watch. This one here was a retail, not a retail, excuse me, a REIT. Within that, it's not a REIT, but it played within that aspect of home furnishings and knickknacks. So it was a kind of byproduct of that. It's in the retail space, but it did really well, into the COVID scenario. Yeah, I guess people were doing a lot of redecorating. This one here kind of, man, it took off. All I'm gonna say, it took off. As you can see, it went from like $3 or $4 way up above like over $30. So I'm definitely watching home, the home group in the earnings. I mean, it's still systems ago. It picked up $3 Friday. The market was tanking. This thing was rocking out. Right. So it's definitely extended, but it was definitely a COVID, stay at home trade. Yeah. They were buying up them little home furnishings. And I got a chance to hit it up on one of this earnings, and I got out. And now again, it's up there, but these jokers still bullish on it. They still bullish on it. All right. So you see the put the call ratio on that. Is weighted in around that 31, in the money, and at the money area between 33 and 31. So, yeah. These jokers are definitely it's extended though. I mean, it's extended, but we'll see. I didn't already had fun in it, so it should be getting ready to pull back. Yeah, there it is. Yep, 27. Yeah. Because it hit peak performance at the 12-month forecast, already, which actually did it Friday. It hit peak performance Friday. Yeah. So there it is, $33 there. Analysts got it priced at 27. And they still bullish on this stuff though. Insiders bought like 10 million shares this past 3 months. Man, they were buying this thing up. It made sense though. It just made sense. So, but it should be getting ready to top out in a minute though. Look at that. 3 months inside. Yeah, the 10% oh, Sos and Clifford. Okay. That's who that was. So they got expansion spree. Oh, so they opened up some stores, 3 more stores in March. All right, so they still growing. They're definitely still growing. Of course they are. Let me see what their numbers are. I'm probably sitting there. So they got 8% particular increase on EPS. I have to go back and listen to that old earnings call and see what their revisions were into this. Rev should be still up, yeah, because you still come out of what? Out of a shopping season in terms of the last, aspect of the year in the quarter, or out of this Q4 quarter. So people are buying stuff like that, Thanksgiving, Christmas, whatever. But like I say, it is extended. It is definitely extended. So whatever. Moving on to get caught up in that. Yeah, but keep your eye on home. I will say that this one worth watching is home. Old familiar foe there.
Okay. Yeah, I'm here.
So and I think, yeah, go ahead. I'm sorry.
Oh no, I was just agreeing.
Oh, that's you. Okay. I thought sometimes. I know it's late. Joking talking like, is he hearing me or did I hear him? Hear them? So definitely home, of course. Again, BNGO.
Yeah, BNGO.
Bio, nanogenomics, of course. It's been pinging. It's trying to get back to that $10 area. It's still extended. Again, everybody waiting for the cat the woods, to ring the register. Or in this case, to get to buy it. I'm just doing a quick little run through a couple of them. We'll come back tomorrow. But everybody got fresh brains. I know, y'all brain probably fresh than mine, so I ain't gonna speak. I'll speak for myself, right? But yeah, they loading up on next week's. Well, next week, but next month. Excuse me. Go ahead. I'm sorry.
No, I'm just saying he's fresh brains. Mine's is fried. That whole iron condo got me.
Yeah, that man, GameStop. But again, I'll map it out, and then I'll bring next time we talk. Give me time to look at it a little bit. We'll come back and put together what the iron condo will look like in that perspective. And then we'll come back and look at the strangle, because that's the only way you would try to straddle. You can't straddle that. You just can't straddle. You can't not straddle GameStop unless you got a lot of money.
Right.
The only way you would trade this is a strangle. So hypothetically, at this point, I would have a strangle at the $300 call. $300 call and the $100 put area. That would be the window, or the kill box I would trade this in. $100 put, $300 call. If I had to trade it, right? I think that's about a net debit around about $800-900. Right? That still puts me, yeah. Yeah. But anyway, I say I want to get back into that because I know we'll be.
Yeah, it'll be 2:00 and you'll be like, yeah, all right,
Yeah,
go.
we'll be fried, and you'll be like, man, like, all right. So yeah, but the Bionano same way. I actually got some calls into earnings. Again, disclaimer.
Yeah.
Some $9 calls that I bought. Obviously, Thursday. I bought some Thursday. Friday was I was thinking about getting another, but I'm gonna wait till Monday, see how spot opens up. I may buy, maybe a couple more. I mean, they still not that bad, $1.50 for that.
Right.
Downside put protection, of course, that puts you around about, in around. I mean, you can literally buy this. You could buy a straddle on this, right? I mean, in the earnings, to make sure that of course, if you want to play against the idea of any kind of theta burn, if they tried it, but I think this thing gonna make a move. Me personally. So the $9 call, sitting at again, as you can see here around $1.50. The $9 put sitting at around what? Close to the same thing, right? So it's about evenly matched in that perspective. At pretty much at the money at $9.03 off at this point here. So that's if a person not necessarily directionally biased in this. Of course, in that case, this is a well oil strata play. For this one, that is. It's definitely well oiled for a particular aspect. So yeah, and keep in mind these don't expire to the middle of April too. So this is the time, a very a good time perspective in it. So yeah. All right, so all right, guys. I guess I'm gonna run it down for the night, and we'll come back and pick back up. Hopefully, if everything is solid tomorrow, we get find a good time to kind of come in here and break down some information. We'll pick back up then. See if we can kind of put together a couple more earnings. Okay, this WJ Winnebago, definitely. All right, that was the stay-at-home trade because people were out there in their little campers, right? Their little Winnebagos. This thing had been on the tear. It went up. I remember it broke out from around like 25 and went over to like 68 and then pulled back. What's the other one? It's another one too. Is it Thor? I think that's not Thor. Is it Thor? I could be wrong. No, what's the other one? RV trader, RV manufacturer. It's slipping me now, but that's the flip side of that. So it did pretty well too as well. Inside of that, that stay-at-home trade, people out there, traveling the country inside of Winnebagos. Who else we got? Yeah. I mean, you got Restoration Hardware. No, that's not them. Oh, yeah, it is Restoration Hardware. That is. Yeah. So this one is going to be interesting too, right? Restoration Hardware is a beast. It has been a beast. Man. Again, Liquid Liquidators, Restoration Hardware, those type like that. Tractor Supply, John Deere. Of course, it's somewhat in the off the beaten path. Those home plays like we saw at home. I mean, y'all see the chart on this here. This one basically just went bonkers. It went from like 120 some odd bucks up where it's at now, 500 some odd bucks.
Wow.
This one here this was the one that big money put their money into, and they just bought it and forgot about it.
Ooh, that's crazy.
Yep. It's it's stuff like this when people like, man, how y'all, man, look, you got to know how to, cast your net broad and wide, especially when it comes to trading, options, of course. But when you get deep into the equity game, start learning a lot of these different assets, then it becomes apparent how a lot of people that make money off the beaten path, they don't necessarily be showing their hand. This is what they be buying. Be buying these stocks like Restoration Hardware. Right? They say, okay, here's a COVID play, and they just went, they went bonkers on it. So, yeah, I mean, it's a solid trade. It's a solid trade. But I ain't gonna mess with this stuff. It's too late. All right, so let me get a log off, guys. It's late. All right, so where we at here? I think we saw our last little. Make sure I didn't leave anything out that I had up here. No, we're good. Yeah, we're good. Where we at here? I think we got most everything. Well, we can get everybody, but I know a few people kind of came in the room. I know it's late, jokers are in and out, but we'll kind of pick back up tomorrow again when I have clear head here, and we'll do some, some strategic placement points for some earning plays because we, as some of the ones kind of talked about here, just in general, there are a few good ones, like I said, that are worth looking at. We did post an earning whisper chart back in the group area, so you guys probably already seen, for the most part, some particular ones that may be of interest into next week. Like I said, I do like the ideal of, definitely seeing how, definitely, if I did that to put it out there, like definitely Adobe. I want to see what BioNano is going to do. Definitely, I'm definitely gonna check Air just for GP for Boeing. Restoration Hardware, you got Momo. You got a consumer staple. I think we got who else we got? We got who we got no Darden. That's the restaurant play. That one might be interesting. So Darden. I'm definitely gonna be watching that. KB Home, of course. Home Builders on the back end of that. We'll see. Shoe Carnival gonna be interesting now that Nike just had earnings. So Shoe Carnival gonna be interesting. Like I said, we'll talk about these stuff tomorrow. We'll talk about them tomorrow. So I get cranking back up again. Don't want to keep y'all through this any longer than we've already sat through this here. It's been a long night. All right. So that's it. So
It's a wrap.
throwing the hands up, back away from the table. And we'll pick back up again.
Peace, power, and profit, everybody.
Peace, power, profit. You over everybody in the back chat. Everybody. Yeah, 3D. Oh, yeah, somebody said Rams, 3D printed home. Yeah, we're looking at them too. All right. Yeah, best. Yeah, same way. I see you over there, brother Rams. You're right. We'll check it out. Peace, power, profit. Joe Smith. Everybody over this world, YouTube world. Everybody over Sunlight. All the esteemed panel over Chris, brother Mathis, over Rich, obviously E over Camille, all right, over David. All right, over Brandon. Y'all some warriors, man. Sister Angie came through. Obviously, Big Boom came through. Thank y'all for coming through as well. Everybody again that's on the YouTube side of the house. Right. Thank y'all for coming in. We'll pick this thing back up again tomorrow. Try to see if we can rationalize out somewhere to get some money. Right. So hope you guys have a great evening. Chill. If you're gonna chill, I'm gonna go get me something to eat. I'm gonna go watch this Coming to America. I haven't even watched it yet, but I'm gonna watch it tonight unless you start watching me. I need to go. See, somebody already watched it. I'm paying it. Y'all will be I haven't watched it yet. I'm about to go get it in. Finally, go watch it. All right. Watch a little bit of Coot to them. All right. See them get it in. So again, until then, I'll see you guys on the next one, guys. Peace, power, profit, everybody. Have a great night. Until we meet again tomorrow, guys. Peace, power, profit, everybody.
Peace, family.
Peace, family. Peace, everybody. Peace.